Now, without any further ado, I would like to take this opportunity to invite on the stage Mr. E. Kumar Sharma, Deputy Editor, FE Digital, to please come forward and deliver the welcome address by setting the context of the day.
Thank you so very much. As journalists, we have been tracking healthcare and the comorbidities of the economy for the last 3 years. And one thing which did stand out was the role of a CFO, the superman or the superwoman in the financial arena. I mean, the CFO today, as we see it, is a man or a lady with many a hat. And compared to what we used to know earlier of they being the bean counter, they being a chartered accountant who will just look and immerse himself or herself in the spreadsheets, it changed radically. And I think the pandemic months gave us as journalists also a lot of learning in terms of how the CFO's role and thereby also the expectations from the CEO and the overall organization from the finance guru within the organization had changed. We thought perhaps it's important to reach out to them, get their perspective in terms of what is, say, keeping up a CFO at night today. What is worrying CFO today? A CFO today is expected to be a good communicator. He's supposed to handle investor relations. He or she is supposed to also be the sounding board, shall we say, for the CEO. And also supposed to be the first to spot any irregularity, financial irregularity. And also be the communicator and also the one who is also considered to be an expert in compliance, regulation, you name it, and everywhere, strategy, role in strategy, strategic inputs. So that's where we thought perhaps it's important that we get the thought leaders in this to tell us in terms of what is the change that they see. And that is why we structured this whole day event, trying to see if we can bring out some elements, some takeaways for various people who are there in terms of how they have seen the scene change, what they are expecting the things to change going forward. So the first session, for example, we have of the CEOs where the heads of businesses saying what is it that they look for in CFOs? So how is it that they themselves have seen organizations change, the landscape, the way they are perceiving it? What is it that today, for example, there was a time when we as journalists, we used to say that the CFO used to be there, the role of the CFO of the year was back channel with the banks, look at only debt. Today, when you talk to organizations, they say, no, we want to reduce debt. We want to look at other elements. So what is driving this change? Today, a CFO is supposed to, at least the pandemic showed us, had to perform in a time when there were no revenues coming. And the organizations were expected to pay salaries, ensure that the vendors get all the money. How is the CFO to generate this? And then the newer forms of models of financing came and newer instruments came. Like how the letters of the English alphabet, AI, ML, and all the other things happened in the finance arena, also new instruments and elements have come in. So have the ways in which finance is now made available. India, for instance, has regulations on FDI. But we don't know, there are other elements. Companies now look to PE, they look to sovereign funds. There are different options available. So how to generate funds, how to mobilize resources, how to deploy them, and along with the CEO, look in terms of ensuring that the entrepreneurial spirit is there within the organization. Innovation is also encouraged. So, as we said in the beginning, essentially, our understanding was that the CFO and in tandem with the CEO has a lot of ground to cover and lots of areas to look into. And in an area where there is specialization, there is expectation for deep focus and all of that, there is a limited way in which one can specialize in each of these areas. So essentially, this was all which was driving us to look in terms of what is it that we hope to achieve from this, whether the CFO is the CFO of the past or is it supposed to be an investment banker within the organization. So what is the expectation? So that is in short what we are trying to attempt here. I hope it's going to be a fruitful session where we get to learn something. At least we as journalists would want to learn something in terms of this day. Perhaps we are hoping will at least let us ask more fruitful and more targeted questions when we go forward, in our reporting going forward, when we do this thing. So it will help us a lot in that as well. So thank you so much and look forward to a stimulating day and a fruitful discussion. Thank you.
It is now time to move on to our first leader discussion. And before we begin it, we all know that a significant part of any CFO role is supporting the chief executive officers in a strategic decision support for decisions ranging from planning, pricing, selling, sourcing, manufacturing, to future gazing to reset priorities. Transformative changes amid uncertainty are not new to most of the decision makers. The focus of our upcoming session will be on prospective thought leaders to cope up with the current disruptions while building greater sync with the financial leadership.
Begin with the period that we have all been through, the pandemic, and the three elements which are there. Pre-pandemic, we had the slowdown in the economy. It was not as if we were in a perfect situation. Prior to pandemic, there was a slowdown in the economy. There were challenges. After that, there was the pandemic, and after that, we've known the Ukraine crisis and the supply chains, snarled supply chains, and all of that is there. So, first, quick thoughts from the leaders here in terms of how is it that they have seen the past 2-3 years, the way the approach, the change of landscape that has happened, and the financial imperatives that it has generated. If I can perhaps begin with Subramaniam, if you can perhaps.
I think first and foremost, the pandemic has been a very stressful period, goes without saying. And for us, being in the biopharmaceutical industry, we had to work through the pandemic. So started from a lot of fear psychosis, and then switched to, making sure that all our production goes on despite all the challenges that we faced. But if I reflect back, there are a couple of things that the pandemic teaches us in the context of finance. I think traditionally we believe that there are some sectors which are recession proof. For example, healthcare, or let's say the cruise industry. But I think the pandemic has given a jolt to all that and said that anything, you can get hit very badly. So one of the things that keeps occurring to me is, if everything were to go to dogs today, can you still survive for a period of time till you are able to get back on your feet? And that's something that CFOs and CEOs have to contend with. One of the first questions that my boss, Mr. Mukesh Ambani, asked me was, how long can you sustain if you have no revenues? And so that kind of gives you a sense of where you are. The other thing that has impacted us from a financial perspective is we've had to carry more inventory. It was not easy getting supplies during the pandemic. And then we have also had to deal with long supply chain kind of timelines. So I think these were the two primary takes as far as the pandemic and its impact are concerned.
I think very important. I think how long can you survive when you don't have any resources and revenues coming in? That's a huge challenging task to cope with. Mr. Sundaram, what's your take on what has happened?
Good morning, and thank you for inviting me and to be with the business leaders here. One thing very sharply came through at the time of this entire period of COVID pandemic. In many ways, I want to put it behind and look forward. That's more important. But having said that, in a risk management perspective, and it might be very, very important and relevant for many of us, is we have to be aware of the low probability, high severity risks. Sometimes the elephant in the room is not missed. but the virus is missed, it's not seen. So this taught a very crucial issue of being ready for crisis management. Be ready, have an organization with front-ended leadership, resilient, which is able to tackle this crisis. That was a very, very big lesson. We might have gone through in the past for such an extended period. This is important. The financial, of course, the financial leadership, where at least on the boards that I have really seen some of my CFOs, were very focused on 2-3 things. One is the liquidity management, ensuring that the cash as much as possible, the churn is happening, receivables are collected, inventory is really depending upon the plan and so on, but very critical issue. The second one that I've really seen is the cost reduction opportunities, controlling the costs and conserving and creating that financial space, what is necessary, which was important. And also the capital allocation. Where should I really, the scarce capital, how do I optimally use it, where do I really allocate the capital? So these are some of the very important lessons that the COVID pandemic taught us, that the hiatus of 2.5 years. But having said that, as I said that, I want to look forward, not really worry so much about what has happened.
No, I think very, very important. Looking forward, more crucial than looking back. Postmortems don't help essentially. It's essentially what the prognosis perhaps is more useful. But very important point you've said about crisis management. And while I would want later to each of you to actually delve a bit in terms of how you have looked in terms of the structural changes when trying to deal with crisis management. But Ms. Diana, your perspective from an L&D
I would
finance.
like to, first of all, fully agree with you, sir, and continue from there. That risk management in its entirety has been fully understood in these last 2 years, I would put it. Initially, you know, even in credit committees or the general refrain was, aise thodi hota. I mean, many of the risk scenarios were put more as, you know, just theoretical possibilities that this doesn't really happen. These are imaginations of the risk manager's fertile brain. That is how it was thought till it really happened. And today actually in risk management, actual scenario analysis, actual stress testing, real life stress testing has come to fore. Of course, I mean, we will be talking about the role of the CFO in this, but overall organization risk management is, I think, a big change, number one. We run a NBFC, so liquidity management obviously comes first. Like, for example, if there are 5 things that an NBFC or a bank or any financing organization has to take into consideration, one is liquidity, second is solvency, third is asset quality, profitability, and then growth. These are 5 items which the market expects every financial institution to take care. And what these last 2 years taught us, that while the relative importance of this or the weightage of this can change, liquidity is always number one, because any other thing, if it can take you down maybe a year down the line, liquidity can take you down today evening. And that's something which it has taught us. I would like to end by expressing a hope that the world, I mean, I'm talking as if, you know, I'm Bhishma Pitama, but yes, one has seen almost 3 decades of experience. And unfortunately, optimism is understood as short memories, that while looking forward, we are very quick to forget lessons of the past. We believe that the lessons taught by these last 2 years, which have been extraordinary, right? Which is nothing like we saw the dot-com crisis or the global financial crisis, were nothing compared to, I mean, nobody died during those, and here people actually died. So these memories and these lessons will last longer before we again start believing aisa thodi hota hai. So that will be the biggest lesson I would think of these last 2 years.
Yeah, I think very important. And I think the fact that this COVID was followed by another set of crisis was in some sense also a lesson that nothing is taken for granted. So very important. But Mr. Subramanian, this point which was mentioned and came across very clearly on crisis management and the structural changes. But here, given that you as leaders, finance CFO's role is one element in your scheme of things as leaders in the organization. How have you seen and going forward also feel that, there will be a permanent shift in the manner in which the finance wing within or the vertical within the organization will be seen, and the greater sync that will have to be with the other elements of the organization. What's your take in terms of, how, from your perspective, where finance is just one element and its changing role, if you could perhaps.
Okay, so if I look at the role of finance or CFO, there are two things that strike me. One is the expansiveness that as we go forward, which will happen. If you look at number of sectors, there's going to be enormous amount of opportunities, particularly in India. You take different sectors, healthcare, you take defense, aerospace, alternative energy, huge amount of opportunities. But the more important thing is complexity that you have to deal with, particularly for a CFO. One is the different avenues of funding that you would have, different types of currencies that you would deal with, beyond the dollar and the euro that we have, different natures of partnership. In our context, we do a lot of out-licensing deals as against the traditional in-licensing, and different structures of those partnerships that we have. And as we go to global markets, and we'll see more and more companies going to global markets. And if you look at technology, there are both endogenous and exogenous aspects of technology. How do you apply technology within the organization in the finance function? Whether it's automation, AI, data analytics, and so on. And also how do you look at technology as it applies in an external context? A lot of digital services, how digital services can impact many of the businesses, particularly your business, because most businesses will be having a digital component as well as a physical component, and both coexisting at the same time. And then the final thing is regulation. In our kind of industry, we are highly regulated, particularly if you take pricing. There are a lot of price controls. I'm not sure whether you'll see price controls in other sectors, but how do you grow despite having a lot of control on prices? So these are some of the complexities that is introduced as we are currently looking at it and as we go forward. So it's not easy being a CFO. I would not envy myself putting myself in the shoes of a CFO.
Your thoughts, Mrs.
Sure. So I was just reflecting on the changing role of the CFO, which you're already saying how the whole thing has been changing over time. And the best was to look at my own 34 years of Hindustan Lever's experience, joining as a management trainee and then becoming a vice chairman and CFO. There's a lot of shifts have happened during that period. Now when I sit on the boards, when I look at the CFOs, I see again the whole thing is evolving. So one thing I want to really very humbly state is renewal and rejuvenation and innovation is very, very key to life. You have to be continuously renewing yourself. You have to continuously reinvent yourself. Otherwise, you will stagnate. That's at one level it is axiomatic. At one level it is so obvious. Now, as a CFO, there are things which I do with my direct intervention. There are many things which I have to ensure they are done. So all are important. But there are certain things which I need to ensure it is done. So there are many things which will always remain important, but I have to ensure they are done. When I looked at them, what could some of them be? Integrity in reporting is very critical to me. Developing appropriate metrics for the businesses relevant, be it NBFC, be it life sciences, I need to help and develop appropriate matrices. Leading indicators and lagging indicators are very critical. I have to ensure there are enough control systems to protect my assets, my revenue, everything. Right? So I need to have control systems because there are people who perhaps may not have the same agenda when they really come into the organization. Then there is liquidity and capital adequacy, which I think Dinanath referred to. There are compliance issues because you want to operate, you need a license to operate properly in the society. So you need to have the compliances. Then, of course, there are a lot of post-reviews, corrective measures. These are all always there. But what is evolving, what is new, I think it's quite important to reflect on them. First, I think is the entire technology which has really come in to play a very critical role in the business. Essentially, from a CFO point of view, data analytics. Nothing like a data analytics today, which you're really able to bring forth and understand the business better. So data and data analytics becomes a very crucial thing. Continuous control monitoring. Today's internal audit, for example, is not really relying on sampling. It is more and more going to test the universe and test the universe and see what the deviations are. Not satisfied with the sampling issues. Then there are preventive and predictive measures. What are those? For each business, it will be very peculiar, very specific. You need to evolve them. Then I think the other important thing which has really come in as a quality is a proactive thinking and risk management. The role of the CFO today in risk management, in terms of the probability of occurrence, the severity of the whole thing, the mitigation, the net residual risk, the entire area, you have to provide a lot of leadership today. Not like any time before. Today is much, much higher. I talked about the low probability, high severity issue. Then your ability to communicate and strategically influence the organization. You're a very critical person. I never look at the CFO as a support function. I look at it as a partnership function. It's a business partner with my CEO. It's a business partner with my supply chain CXO, and so on and so forth. It's not a support function. Support function relegates me to something else. But I'm at the table, I have the same stakes. I have to ensure, I feel the same way the pain is that the CEO feels. That's very important to understand. It's not just a support function. I need to have a very big role in talent development. I have to ensure that my talent is developed very well, because I need to ensure the organization continuity, the perpetuity is secured. So therefore, I need to be a mentor, I need to be a coach, I need to develop my people, so that when I leave as a CFO or whatever, or the function, I am remembered but never missed. It's a very important thing. You remember me but never miss me. Then I think there is a meaningful dialogue today with the board and audit committee, because I need to spend a lot of time with my board members and my audit committee, because I have a very important role to play with them. Governance is at the heart of the whole thing, and I really carry a lot of mantle for it. I have a lot of mandate for it. Then I would also say today, the other big important piece which is developing in many manufacturing, also for companies like Subramaniam's, is the ESG. I need to now evolve the measures and understanding and reporting on ESG, that environment, social and governance. Already the SEBI has mandated that the BRCR, that business responsibility and sustainability reporting. So there I think as a CFO, I spoke somewhere, there are 4 A's. The availability of the data, the accessibility of the data, the accuracy of the data, and the assurance on the data. So therefore, I need to have that responsibility on ESG. So these are some of the things which are really sort of moving. So I thought, I'll just give a sketch of where I really see the whole shift is happening.
No, I think very important. Good. I think that you also looked at ESG, because that is becoming, from a lender's perspective also, banks have started talking. We recently had a meeting where, the Standard Chartered, Ms. Zareen Daruwala was mentioning about how ESG has become important, the way they look at things, so it's important. But of course, there is a tendency to have greenwashing as well, to use all the right words, but to what extent that happens, but it's all evolving. Ms. Dinanath, from your perspective in terms of what was mentioned, and subsequently I would want the thoughts from each of you in your organization as a result of that. That will be a second part about how you have perhaps looked in terms of making some changes. But before that, your thoughts.
Sure.
Yeah.
I mean, yes, sir has been so comprehensive that there is always a disadvantage of having the last word, but a big disadvantage, because to follow up on his act is difficult. So I will take support of what I always look for learnings, and I look for learnings in mythology and Indian history, and you get a lot of learnings from various characters. So just to make it interesting, I will just quote a few characters, how the role of CFO have. So when I was just spoke to you first and thinking about it, when you go back to when I was a young boy just out of the college, I remember the CFO to be more like Chitragupt. Chitragupt is the accountant. who will keep your credit and debit after the act is done. You can't do a shit about it, right? Sorry to the language. Life is over, you are there, and he will only tell you whether it is plus or minus, and you can't do anything about it. You have to just face the consequences after. So that was the role of the CFO. And he was also called the financial controller. He was called the chief accountant. You know, even the terminology had not developed to chief financial officer. So it was more, the control was more of the, I would think from there, and I would just share personal experiences, how I have seen colleagues, bosses develop. The second stage, I would say, that of Vidur. So Vidur was obviously, I think, hopefully everybody knows, Mahabharat, he was the brother of King Dhritarashtra. Vidur will not only keep accounts, keep record, but he will also advise Dhritarashtra. He will advise Dhritarashtra on, so he will keep records, he will control, he will advise on what is right, what is wrong. But he stopped short of ensuring that Dhritarashtra did something. I mean, if he would have ensured, then perhaps Mahabharata wouldn't have happened. Right? So he stopped short of ensuring. Then I would move on, come from mythology to history to Chanakya. And the third, then it developed into Chanakya. So Chanakya not only kept records, told what is right, what is wrong, advised, and then pushed Chandragupta into actually doing the right. So that's how the CFO's role evolved, that he pushed the CEO into doing the right thing. But Chanakya also stopped short of actually being in the field. Right? That he was still the backdoor advisor, even though he ensured. Today's CFO is not like that. I would think today's CFO has reached the stage, perhaps ultimate stage, but then I'm sure life develops, of Krishna, who was there in the field, was the Sarathi, not only advised Arjun, made sure that Arjun wins every time. When Karna put Takshak on an arrow and shot at Arjun, he put the Rath a little down so Arjun is saved. So you would see all throughout the Mahabharata war what the CFO does today, right? Now, am I burdening the CFO too much? Am I expecting him to be a superhuman or her to be a superhuman? We have to remember that throughout the war, other than one or two incidents, Krishna didn't pick up the weapon. So CFO still leaves the business head and CEOs to run the actual weapons, to be in the market, but actually goes ahead and makes sure that the war is won. The CEO doesn't go astray. The CEO suddenly at the beginning of the war doesn't say that I can't fight this war. CFO makes sure that all those things happen. So I know I'm putting a lot of burden on the CFOs here, but that would be how the role has developed as we have gone.
That's amazing. It's such a heartening thing to see so many Krishnas here, that it's quite nice that you're giving this role. But I was wondering if the CFO is the Krishna, God knows what is the CEO then, because he's supposed to be controlling the CFO. I see. Okay, the roles reverse. I see. Very nice.
CEO is Arjun. It is Nar and Narayan always.
Okay,
is Arjun.
I see. Okay. So such an illustrious backing when you have Ms. Subramaniam, tell me what are some of the changes that you effected in the past couple of years, which will now not just ensure that there is a role for greater role for a much more fruitful and constructive, a strategic role for the finance, but also something which is better prepared from your perspective as the head of an organization, better place to deal with any crisis in future. I know crisis cannot be predicted, but some fundamental shifts which you have made, maybe one or two examples which you can give if that's possible.
Okay, so you used the word illustrious, right? So I can tell you that we got promoted.
Closer to the mic.
You used the word illustrious. Yes, illustrious, yes, but I can tell you that we got promoters funding till 2008. Then I was told that now you're grown up, you can stand on your own feet. So we went through 2-3 years of very difficult time when we had to look at every rupee, every paisa that we had. And that time, the support that I had from my head of finance at the time was very, very important because, how do you manage, how do you make sure, first we'll make sure that our employees get paid, then make sure that we have enough finances to take care of vendors. And we managed a very difficult period and we looked at some innovative ways of funding because we had a framework saying that you will not get in promotes funding, you can't borrow, but you have to manage. So we moved from there to doing pretty well. Today we are about 2,000 crores in revenues. But in the recent past, we've been through another, and going forward, we'll have another stressful period. So we started looking at what are the risks that will impact us. And in the pharma industry, the big risk is China risk. So what we did was, how do we de-risk ourselves completely from China? So in the API business, we started looking at key starting materials, started for making our APIs. So progressively, we'll reduce our dependence on China. And if you look at where we are currently, again, there are risks, what I call collateral damage. High inflation is something, how do you deal with the context of high inflation? Long supply chains, you might have a purchase order, but you will still not have the material in your warehouse. So that's another situation that we have deal with. And then there are collateral damages. If you look at today's situation, if I have placed a lot of orders and most of them on European capital equipment manufacturers, and if a lot of issues are there as far as Germany's production is concerned, as a consequence of Russia shutting off gas or Europe not getting oil from Russia, that might impact my deliveries of capital equipment. So these are the kind of things that you need to constantly look at. So to me, the CFO has been moving from what I used to call a conscious keeper for the organization from a financial point of view. CFO also has the authority to hold my hands if I'm not doing something that is right. And that's the kind of status that I've always treated the CFO with. To a partner in corporate development.
Partner
in corporate development. So I think that's a fundamental shift in which I see the CFO. So going forward, we have a major investment program. We will go again through a very stressful program. And I think the role of the CFO is going to be very important to take us through that journey for the next 2 years after when we start getting reverse cash flows from the investments that we are making. So that's broadly the kind of journey that we have had.
Yeah. Any shift before I come to Mr. Sundaram and Mr. Dinanath, any particular shift which has been now permanent in the way your operations are structured, the way decisions are made, the strategic component. Like for example, I'm saying, like for example, liquidity management cell, or say a liquidity management council, or liquidity or something around that, some structure created or something which is there, which is now have a life of its own. Has some such thing happened?
Not in a fundamental sense, because what we have always believed is in consensus-based decisions. So every major decision that we take, we discuss. In fact, on a daily, every day our executive management team meets and we look at all the issues that we are facing. We take decisions based on consensus. But the nature of those decisions, some of them are relatively new to deal with. At this time, we're looking at, traditionally we used to export. Then that shifted to out-licensing because we had developed quite a few things which we could license out to. That is now shifting to licensing with probably an equity stake in the organization to who's a partner. So these are the kind of shifts that are happening, but not in terms of creating structural changes as far as the finance organization is concerned.
Okay.
I don't know if I've been able to answer your question.
No, I think you conveyed the larger thought in terms of how the approach is going to be fundamentally different. Not necessarily a structure, but an approach, which is important.
So I think, as I said, the organization definitely has adopted to this new role, and the CFO has adopted to this new role. The organization thinking, let me talk about. Again, I would repeat these 5 things of liquidity, solvency, asset quality, profitability, and growth. Now, this waterfall has been hardwired into the organization. That all 5 are important, obviously. For the shareholders and all stakeholders, all 5 are important. But the whole organization will necessarily think of it in this order. That it will always be liquidity first. And then the organizations shift like that, right? The CFO as well as his department, treasury management, treasury strategy, liquidity risk management. These departments obviously get strengthened more. We make sure that even at zero collections, a particular period, all debts will be repaid. Of course, zero collections didn't happen even in the type of bad pandemic, but even then, we should be protected. Maximizing leverage was supposed to be the thing for maximizing profitability of a financial institution. From there it has come, no, it is a particular level of capital adequacy, way more than what RBI requires is required. Various of these changes have happened. Risk avoidance has also moved to risk management, which also takes into account opportunities as well, right? Because the pandemic has shown that if you would have just avoided risk, you wouldn't have had the cushion to handle the profitability cushion to handle the pandemic. So it's not just enough to say that I will not lose. When the time is good, you have to make enough money for that, so that when the time becomes bad again, you have the cushions. So these kind of, thinking have come. Data analytics, as sir was saying, data analytics has come up as a strong department. It not only looks at business, we look at data analytics as every part of the ROE tree, that how growth can come from data analytics, how margins can come, data analytics can help, how expense management data analytics can help. And last but not the least, how collection efficiencies data analytics can help. It is not only important to manage what is the mean collection, but also the standard deviation. And based on that, detailed liquidity management. So things are not now, I would say things are less intuitive. You don't expect a CEO to say, okay, I have seen it 25 years back, things happen like that. A CFO to say that. Yes, experience has certain advantages, but I always say आदमी और अचार में फर्क होता है. I mean, it's just not aging that makes you good. It's renovation, it's getting new knowledge, data analytics. There are lots of tools to help. Organization has to change, and our organization has changed to use these tools to the maximum. If I can summarize, the organization, I would think over the last 5 to 6 years, I mean not only last 3 years, have let go of the ego of personal knowledge, personal experience, and saying, okay, I have personal experience, but I know that that has limitations, and I will use collaboration, I will use the advantage of tools to maximize and augment that personal experience. So moving from a large ego of personal achievement and experience to putting organization first and how risk can be managed and opportunities can be maximized is what organization has developed, and definitely the CFO's role has developed.
No, I think very important what you said about that past pandemic, at least to us as journalists, pandemic showed that past experience is no good. In fact, the way we used to write earlier, pre-pandemic, has changed. Earlier, we used to write in magazines in huge length form, create the scenario, explain the whole thing, talk of the flowers and the fauna and the flora and all of that, and then come to the issue. Whereas now it is read on the mobile phone, so staccato style, give the main thing first and then leave the rest. So we've changed, of course. So he said important points, Ms. Sundaram. Your thoughts?
Both of them have really put the point very well, and I want to pick up from what Dinanath has said. See, I think the mindset, the change we're looking for, it is a mindset changes. Don't just look only the box changes. It's the mindset change. It's very contextual. 2004, I remember there was a huge competitive attack in Hindustan Lever in detergents, right? At that time, we all sat together. It's a teamwork. It's collaboration. Each one of us brings our perspectives. We synthesize it. The CEO finally has to take a call, and then collectively we own the responsibility. Sometimes as a member of a team, you may have 70% agreement, but 100% commitment in implementing this. That's very important. Because you may have a 70% agreement, but you have to have 100% commitment for the organization, ultimately when you are implementing that entire thing. Because it's not about your personal views, and finally when it will come. So today when I look back, that decision was an outstanding decision. in terms of where the market share is today and how the organization is sort of growing and so on and so forth. So in terms of thinking, I think Dinan has touched a very, very interesting aspect of what I call the performance gap versus opportunity gap. As a CFO, it's very important for me, to the organization and to the CEO, one thing to say that what the performance gap is. Because sometimes if you rely too much on the budget, people lowball the budget. So don't get carried away by the budget and comparing with the budget. In one organization, very, very nicely we have really done, the incentive is based on, the CEO's incentive is based only on 50% meeting the budget. The 50% is the relative performance to the other competitors. We've agreed who the other 8 people or 10 people are, and where are you? Are you above the median, at what level? Which percentile are you? So you are very clearly saying 50% is budget, because then budget becomes a negotiation issue. Because then I try to lowball, he tries to push it up. It doesn't help. Part of it is good because you're planning the whole thing. For planning, it is very good. So that's one thing. See, the other important thing is dynamic performance management. Once you have very often, I have really seen in my experience, when a budget is made, it becomes obsolete as soon as it's written. Because things change so much. The dynamic performance management concept is very important. In HUL, we had this dynamic performance management when we had this model of any one parameter changes, what is the ultimate impact on the right up to the return on capital employed, what really happens segment-wise, material costing, then pricing, then your gross margin, then your expenditure, and so on and so forth. So the dynamic performance management has got to be woven into the system. So it's very contextual. Things have to keep on changing. You experiment. Sometimes it works, it fails. Then you reintroduce it in another form. Train the people, communicate across, because change management can only be done through continuous communication. You have to keep communicating to the people, then they really sort of get it, and so it's very, very contextual.
No, it's very important. Last, I think if I can just get some thought on, if we are looking in terms of, given your deep experience in your respective fields, if you're looking for, let's say, some qualities today in a CFO, what would those be predominantly today? I mean, if you were to, if you can share some thoughts on that, and then I would perhaps, if there are some questions from the audience, I would want to take those as well.
Yeah, I think what comes top of the mind is the CFO as much as the CEO and others. It's important to look at larger socio-economic or geopolitical events and see how that has a bearing on your organization and going forward. And how are you preparing the organization to deal with this? Today we have some real situations, as I mentioned, whether it's inflation or geopolitical events and how they're going to impact us.
So you're saying like de-risking in the geographies that you have, things like that. Okay.
Also preparing yourself for those kind of situations. So that's one thing. Second is providing enough latitude from a CFO's point of view, providing enough latitude for businesses to perform without compromising many of the checks and balances, compliance requirements. This is the other thing. So essentially, it's working in a kind of a partnership where you motivate, but at the same time, where you need to draw the line, you have to draw the line. And third, of course, is working with the CEO as a partner, as I mentioned, in the growth and development, sustainable development of the organization is concerned. I think these are the three things that I would look at.
Yeah, Ms. Sundaram, your quick take in terms of the
sure. Very nicely said. First of all, I just want to recognize that the CFO is a leader. So leadership is very important. When we assess or when we look at people, there are two axes, and I then draw from my Unilever experience. One is what you do. That's your domain expertise, your domain knowledge, and that is evolving, changing. ESG is a very classic example. Risk management is an example. Governance. So it's the domain, what you do, what you deliver. But how you deliver is also very important. That's your leadership attributes. In Unilever, we used to have an acronym called GREAT B.
Great.
GREAT B. I'll explain to you how it is, very briefly. GREAT B. G stood for global mindset. R stood for real accountability. I stand up and be counted to say that, yes, I will. Real accountability. E stood for external orientation. Because very often we tend to be very inward driven. Particularly if you're a very successful organization, then arrogance sets in, then you really think that there's nothing to learn from outside. So the external orientation is very important. A is action, not debate. Because we are not winning any points here. This is not a ping pong match. It is really action because not activity. So action and not debate. And T is team alignment. That I have to be part of the team. I am not prima donna. I am part of the whole thing. So when we were speaking, you said that the CSO, everything has to be approved by the CFO. It's not like that. Ultimately, it's a resource allocation. Ultimately, it is a capital allocation. So therefore, I think what is the best for the organization should be really done. So team alignment. And B is building great talent. I will never underemphasize that point because I just want to leave a powerful team all the time. Nothing like building capability. As a CFO, I want to spend good part of my time in building capability. That is when I am really a true leader and I am a true CFO. So what I do is important. The domain is evolving, but how I do is very important. So that is why. So I have to not only do inside out, but outside in.
Wow.
So that's very important.
So domain dawns and dexterity in delivery.
Brilliantly put, sir. Brilliantly put. Actually, I would also add, completely agree and add my 2 bits to it. We also follow 2 axes, and those 2 axes we call skill and will. Skill and will. Will. W-I-L-L.
Yeah.
So skill, as you said very clearly, you see developing skills, need for development of skills for a CFO. By the way, this skill and will is not only for the CFO or finance function, that is how everybody is assessed, every leader especially is assessed in the organization, that how you do. So skill, I mean, we have spoken a lot about it, from accounting knowledge to financial management knowledge, to treasury, to risk management, to ESG now, data analytics, digital. These are all developing skills. Educational courses as well as later on executive training courses are developing accordingly, and those things can be managed. Every good person will learn, and will is another thing altogether. That is something which cannot be taught. You either you are taught that by your parents, the way you bring up, or it is the organization culture which either teaches you that or say, okay, if I don't align to this, there is no place for me in the organization. So that culture has to be drilled in. One thing that we look for, and if I can summarize it, it is the lack of ego, personal ego. And and how does it mean? Does that mean you have no self-respect? No, of course you should have a lot of self-respect, but not ego. And according to me, ego is thinking that you know so much that nobody can teach me anything. Nobody can give me new skills, new way of thinking. That's ego. And that is one negative mark in our organization, because we have to believe that there are always new things, new tools available in learning, pushing that. And we actually, what we do also is we almost ruthlessly move people across departments to see their adaptability. I think HUL sir does that. I mean, we have actually learned a little bit from that organization that move people across. So this will for adaptability, for team management. When I say self-respect but not ego, it also has the confidence to develop people. Let people push you up, right? There are people who have reluctance and who surround themselves with fools so that their position is not threatened. We look at it with a very negative lens, that if your number twos are not good enough to replace you, then it is your negative mark, not the negatives, not the number twos. So these are, this axis of will, while the skill axis is obviously very, very important, but you can hire. We always actually look at others. We hire for will, and skill can be got. Train for skill. So skills can be trained for. But hiring, especially at the top 100 people, is always for will.
Yeah, very important. I think skill, will, and also that letting go the ego. That's very nice. So I think, Diksha, Priyanka, do we have time for more questions? Huh? Can we take 2 questions? Anyone would want to?
Check.
My question is so CBDC is a widely used term or in discussion right now. I mean to say central bank digital currency. Okay, so what we see means what we can expect in the coming 5 or 10 years, that how financial projections can change, and what are the buzz you hear around it, like how will we prepare in that context?
Have we heard the buzz? Yes, the answer is yes. We have heard the buzz. Every time I meet anybody in the government, including the FM, that talk about it. Where we are there in the preparation of it, we don't know. There is not enough evidence, globally, of a central bank digital currency. Right? There is a lot of evidence of digital currency, NFTs, cryptos, etc. But a central bank digital currency, there are handful of examples. I think if it was 2 years back, again I would have the ego of saying this will not work. But last 2 years have taught us that don't dismiss anything. Keep a close watch on it. Too early perhaps to say how this will prepare. Because right now we are like 5 blind men with an elephant. We believe that it will have different shapes, from a pillar to a rope to various snake to various things. But RBI normally will first come with a discussion paper, then guidelines and all those things. We will hopefully have time to learn. Unfortunately, there is not, hardly any global evidence to learn from. So that's the issue today. But yes, I think India has done, success of many things where there is no global evidence, like UPI, for example. We have made complete success of something where there was no global evidence. So perhaps we will. Again, as I said, we should be, ears to the ground to learn from.
I think, my view is that medium of exchange, digital currency is likely to take it this one. It will become a medium of exchange, probably. It's like many of these things have evolved, whether it is even NEFT method of payment or real virtual payments and so on. I don't want to delve into this speculative aspect of what is really happening to digital. So digital currency is very much likely to come. I don't see it's really going to be such a huge burden. The technology will catch up with it, and you just be prepared for it. 1 or 2 people must be trained in terms of capability, so that they really, when the whole issue comes, that the organization is capable of carrying this forward generically. So I don't want to delve into the speculative investment aspect of it, but I think as a central bank, it is very likely to come, because ultimately money, as they say, is a matter of functions of 4, a medium, a measure, and an exchange and a store, right? So therefore, all those things will really happen. So we can prepare, the technology will equip you to do that, identify some people, train them for this whole thing. So the organization's capability is really there to handle that. Yeah. So that much I can say.
And very frankly, even now in a way, I know I'm oversimplifying, okay? So don't take the literal meaning out of it. But whether it is a corporate or whether it is individuals, 99.99% of your wealth is just bits of data in somebody's computer, right? Even at this point of time, it's not real. From moving from there should be just one step. And trust.
I agree with you that we do not know how this animal looks like, how it's going to be. But I think it's going to depend a lot on to what extent would regulators want to have a handle on this. So the degree is something that we'll have to see. But sooner or later there would be, I think it would come.
So thanks so much. I think there'll be, of course, lots of questions, but so that we don't have a spillover in other sessions. I think so. Thanks so much.
Thank you.
As we all know that today, when everything is so tech-driven, not only CFOs, but their entire team work really hard to stay updated and try to make their processes smoother. And what can be more pleasing than having some tech experts in the market who are ready to help you with that converge. We have one such expert with us, Mr. Biren Master, Client Sales Manager, SAP Conquer India, to please come forward, and he's going to come and enlighten all of us with intelligent spend management. Let us welcome Mr. Biren with a thunderous round of applause.
Good morning to everybody. A tough act to follow. The thought leadership displayed over here was extremely insightful. I'll first start with a humble introduction of myself and our company. I'm Biren Master. I'm part of the SAP Concur India sales team. I've been with Concur for about 4 years, and I have an overall about 1.5 decades of experience in sales. Moving on a bit, I'd like to give some introduction about the company as well. Concur specializes in expense management, and we've identified two major divisions as far as these expenses are concerned, and I'll take you through those as well. We are about a 3-decade-old company specializing only in spend management, and thankfully we've had a good run. We've had a good legacy to build upon. We have approximately 50,000 plus companies who are our customers, who are using our platform on a daily basis, and we have more than 50 million users within those companies who are using our platform as well. In India, we've been, I think, about 7, maybe 8 years old, and we have approximately some 1,200 to 1,500 customers actively using the platform. Moving on, I would first like to start with some figures which IDC has gone ahead and displayed and published. 98% of finance leaders say that total control over spend management is important. I think it was pretty obvious. I don't know who are the 2% of people who said that they don't like such a control. Then let's say about 81% of leaders say that they lack total visibility into these spends, into various areas. We are trying to help these companies achieve visibility as well. Concur has gone ahead and identified 4 major value pillars. So whatever the pain which companies are facing today, they can be bracketed into these 4 elements, right? So the first is controls and compliance, which basically deals with how you are going ahead and controlling your spend, which is happening probably on a real-time basis. Then we get on to spend governance, which is essentially leading to your assessments and your analytics on what has gone by and how can you go ahead and correct the situation for the future as well. Employee experience, obviously, while we have CFOs over here, I'm sure that they are also sensitive to this particular value pillar. And the fourth, very, very important, especially from a future standpoint, since we are all talking about it, is the expansion and optimization of processes, right? So the scalability is something which is very important. This is how we envisage an intelligent spend management platform. Basically, on the left, what you see is the complete source of spends of a typical organization, right? So they may be, let's say, related to your travel spends, right? Essentially, which are employee-initiated spends. Then you will have, indirect spend, which might be happening in your organizations, as well as some direct procurement, which you might be doing. Then let's say, whatever cards you might be using currently to make those spends, etc. All of these are avenues through which you go ahead and you spend money within the organizations, and any persona can go ahead and do it, whether it is, let's say, your procurement team or whether it is your employees. We've gone ahead and we've bracketed, as I said, the spends in 2 major areas. One is the employee-initiated spends, which essentially deal with, let's say, the expense and the travel part. And then we have the vendor-initiated spends, which is essentially the invoice management. Now, what is important at the end is that you have complete visibility and control to make intelligent decisions. And in between, which you see is what we have created a platform to ensure and enable you to go ahead and do that as well, right? So you need to go ahead and manage every source of spend, and ultimately you need to have a unified view to help and control these spends as well. There are 3 major areas which I mentioned, where we go ahead and we focus. The first 2 are related to employee-initiated spends, which essentially means where the employee is going ahead and making spends on behalf of the company and will ultimately go ahead and claim those as well. There are various parts to it. There are various products and modules which are part of this program, and those completely depend on what is going to be your pain, what is your, let's say, trend of spend, which industry are you in, and so on and so forth. The last bit is the Concur invoice management, which is essentially related to AP automation and management, where we've gone ahead and created a platform which allows the AP team to go ahead and process vendor invoices extremely smoothly, right? So essentially what will happen is that a vendor invoice will come in, you will have, let's say, an OCR going ahead and scanning those, creating a payment request, and ultimately triggering a workflow. This is in a very, very simplified manner. I have mentioned it over here. There's a lot to the product, and if interested, we'll be more than happy to explain it at our booth. So these are just, considering the, the short time, what I've done is just illustrated our own legacy over here. The bottom parts obviously are more related to the finance professionals, where you see a lot of increase in efficiency, not only in terms of processing employee claims, but also in terms of processing vendor invoices. You typically do not want to get into a situation where your vendors are calling in saying that when is the payment due, and you are then saying that the invoice has not even reached us yet. We don't want that kind of a situation. We are enabling organizations to go ahead and have complete visibility into whatever invoices are coming into the system. The efficiencies are also created by reducing the manual load, right? 86% is the FTE redeployment into let's say whatever other functions might be there, right? So currently, let's say if you have an army of people working on just processing the invoices, the idea is to go ahead and automate mundane activities, put policy in place, put checks in place, and approval cycles in place to make sure that they are doing what is absolutely necessary and nothing beyond. And lastly, the most important part is that we are able to go ahead and give a ROI within 1 year, and that includes the implementation time as well. Just a few statistics in terms of the implementation. I think earlier, till about 2018, the typical implementation time used to be more than 6 months, but over the last 2 years, we've gone ahead, created, along with our customers, a significant improvement over there to say that now we are able to implement within 3 months itself, which means that you get your money faster. Lastly, actually, I would just like to say the earlier part was obviously related to the employee expenses. This is more related to the vendor invoices, where we've gone ahead and helped organizations cut down on the duplicate payments. We've gone ahead and helped customers process the invoices much faster, and the scale is something which we offer to the customers as well. That's about it, which I had to present today. Thank you so much for your time. And we are here. We have a booth outside. We and my colleagues are here. In case you have any questions, we'd be more than happy to take you through it.
Let's talk about change. Embracing change for good. CFO's role in strategic decision making. Well, all of us know that change is inevitable. However, bringing perspective and clarity to it is significant. Offering intense solutions and a blueprint of financial decision-making, Chief Financial Officers play a critical role in ensuring deliverables, implementation, and setting up the big picture. So, what is the secret recipe behind this?
Thank you, Financial Express, for this opportunity, and good afternoon, everyone. When I heard the word big picture, right, when few years back, when I took over as the CFO at matrimony.com, somebody asked me what do you think of the CFO role of the future? So the thought that came to me was the CFO itself, the word CFO itself is a misnomer. I off the fly coined the word, maybe the CFO should be called the Chief Big Picture Officer. So when I heard the word big picture, it just occurred to me that I coined that word a few years back. On that note, we'll start off the conversation on this big picture. So we all know that the CFO is in a very good place for strategy, right? They obviously get the big picture from everywhere. There are various sources. CFOs look at a long-term view, look at strategic decisions. They interact with various stakeholders, etc. But in reality, how do you actually get this big picture? One, that's the first question. The second one is that how do you know you're not missing something for the big picture, right? So that's the second one. So to that, maybe I'll address this question to Pramod to get some views on this word called the big picture.
Yeah, thanks a lot, Sushant, and thanks Financial Express too for having me here, and among the great finance leaders here. So, and it's really humbling to share the thoughts around this. So, I think you're absolutely right. In fact, the current role where I joined around 1.5 years back, while preparing for this role mentally, one of the questions was saying that what exactly am I going to do differently, or what will be is it only finance or is it beyond that? I think the good news which is there is that I think, as you rightly said, CFOs, because of their inherent skill set and the access to the various dimensions of numbers, are very well placed to give real objective point of views about strategic decisions. But as you rightly said, on the other hand, I think the mindset or the image which sometimes the finance professions carries of a Mr. No, or somebody who kind of, generally starts with, say, with a negative. And because of that, a lot of times on a lot of strategic decisions, which are at times driven by passion, by gut feel, etc., are not kind of bounced off or discussed with CFOs. What I found in my own experience, working with the CEO and the larger leadership team was that I think if you can put your perspectives very objectively with the leadership team, with the strategy team, I think they are very open to those kind of conversation. The only difference which I've seen is that you need to be not a gatekeeper, more of a player in the game, where you bring value to the table, where you kind of genuinely deliberate on how to make a certain strategic call, a strategic initiative possible. And once that kind of a trust gets built up over a period of time, I have seen, and this is my own journey, which I saw where I was not part of a lot of strategic discussions to start with, and my primary role to get the finance running efficiently and well. Initial days, I need to push through to get a seat on the table to discuss these strategic points, and also put my points henceforth where you can actually build scenarios and things like that. But over a period of time, when they saw that there is a value which comes because of a different perspective or dimension to the whole decision, they're very open to discuss. So as I said, I think I thought the critical aspect there was how are you a team player and working towards making that strategic initiative possible, rather than a person who is a gatekeeper and say yes or no, depending on whether it meets financial parameters or not. So I think that mindset, as a CFO, we also have to play very well. And I saw that, I think, eventually the leadership team, the CEO comes along and makes us part of the whole, the decision-making process. So I think that has played pretty well.
Sure. Thanks, Pramod. Kalpana, just a few minutes back, in the hallway conversation, right, I also caught the word the Chief Big Picture Officer. So does your organization have something like that? What are your comments on this whole big picture?
Right. So we have someone called the signals officer. So the person, basically what they do is they capture saying what's going on around in the world. In my view, catching signals is, I think, very similar to maybe parenting a teenager. Because you have to actually watch what the person is doing, you have to watch what their friends are doing, and you have to watch where the whole world is going in terms of things, So essentially, you need to develop a diverse network of data points where you can actually capture signals, both, inside, sideways, and outside as well from the organization, so that you know that you're being relevant, both from, being a team player as well as probably, participating in the game. Because if you're playing Monopoly and you have a Chinese checkers coin, it's a problem then. Yeah.
That's interesting. So, but no strategy is complete without, without knowing the financial levers, right? And sometimes the organization gets very excited. They want to do many things, but I think they lose track of what we call the financial levers. In that context, how does a CFO inculcate that discipline of financial levers? And this question is to you, Tarun, is how do you meet business stakeholder expectations? How do you inculcate, discipline of financial levers within the organization? And is there a framework that you create for all of this? Because strategy without numbers is not a strategy at all.
Good afternoon, everyone. Before I jump to this particular point, I think in the previous session, we all CFOs were called Krishna. And Krishna was having a big picture view all the time. So the answer to the first question was also that I think the organization, the CEO and everyone looks towards us that we will be having a big picture on each and everything and we can connect the dots. Coming to this particular question, this is very relevant and generally when we think of an idea, we want to implement that in the organization. It's a strategic idea, we want to quickly go about that. And most of the time when the ideas are getting implemented or any strategic decisions are taken or implemented, the benefit are generally not thought through, it's ignored in the initial phase. So it's a very simple tool framework, which is, I think, used over a number of years and still being used, but it's called CVA, cost benefit analysis. It's a very simple one, but it's very difficult to implement. It's very complex because it's easier said than done when you reach out to your business functions and say that I want a CBA for this particular initiative you want to do. Generally, the answer is, oh, it's very long term. You get a benefit in a long term. We cannot anticipate the benefit right now. And most of the time, you will see the intangible benefit coming on the table for you, right? And that's why it becomes very difficult for the organization, and especially a CFO, to take a call. And therefore, what generally we do, we try to think it through together with the business function that if you are implementing such change or anything, how it will shape up your function, how it will help the customer, how it will help other parameters, and how the benefit will emerge in a tangible rupee value. Because ultimately, if anything cannot be measured, it is something which is not going to happen. So, Sushant, that's how we need to think that there is definitely a benefit. One more thing I just want to add quickly is most of the time you will probably hear from your organization, business function that it will improve the customer experience, right? It's very, very easy to say that customer experience. But when the customer experience is increasing or improving, it is definitely going to come into the tangible benefits either through improvement in sales or through improvement in efficiency, reduction in cost, etc. So ultimately, I strongly believe that anything which you do will come down to the rupee value at the end of the day. So it's only how you will, project it, how you will anticipate it, how you will take into consideration while evaluating any particular strategic decision. So that's how generally, we should do that.
I just wanted to add to that. I think very well covered by Tarun. I think we use a similar model, basically business case for any strategic decision being taken. I think the challenge which you say is, is very relevant, and what I've seen again, a lot of intangibles flowing in, which can't be quantified and all that. I think one of the realization which I had during such conversation is also that sometimes the marketing team or the strategy team or the operations team who are leading the whole initiative also need to be educated as to how to kind of quantify a lot of those benefits. And the interesting fact which I have realized in those conversations is once we get to numbers, sometimes they have a rethought on how to implement the whole initiative, because they have not thought through some of the angles which we bring to the table. So they definitely see the value, but it also kind of takes them back to the drawing board to kind of refine it, make it better. So I think that discipline probably is something which is which works wonders, I would say.
Oh, you want to add something, Kalpana? Oh, okay. Fine. So the next theme that I had is a little tricky one. The CEO CFO relationship, right? You need to keep a balance. You need to play a challenger role, I would say, because I think end of the day we all have a fiduciary responsibility. We wear various hats and all of that. So how do we deal with this, right? How do we play a challenger role? And I think a lot of times it may happen that, and nothing wrong with that, the CEO has a lot of passion and gut when they make decisions, but we need to bring some sense into that whole frame or scheme of things. So how do you deal with that, Pramod? Like, how do you encounter such situations? Is there how do you play the challenger role? Is it difficult? Things like that.
So I think it is definitely difficult, and I'm sure everybody would be kind of relating to it, because not only on the strategic decision making, also on the operating side, also at times there are decisions which are led by CFO out of his gut and want to implement that whether you like it or not. So those conversations are definitely difficult. I think one element or I think hygiene factor is definitely a lot depends on how the CEO's thinking process is, and whether he appreciates the whole business case approach or things like that. So that is definitely a conversation which, for example, in my case, I had with my CEO, saying that this is where I'm, I want to work with you on that. So people appreciate, and thankfully our CEO, the board, thinks very objectively from that perspective. But I'm saying there are my earlier experiences where people are completely driven by passion and they think that you are the roadblock and all. I think in those cases, sometimes we also get blindsided by just one dimension of decision making, which is financial. I think many a times it also makes sense to look at the other dimensions which are outside in, which is like industry data, say, your sales data, customer level, things like that. So for example, when you're building a business case for a new product, there is a lot of external data available, and how do you triangulate those data sources to speak the language which probably marketing understands or CEO understands. That goes a long way in having the acceptance to the whole, decision making. And that brings a lot of credibility to your work, brings trust in you in terms of being the team player, and also helps sell through the whole decision. But I also feel that I think that's one part. As you play more and more, with the team and all that, I think your evolution in the overall management team also goes up. Starting from somebody who was supplying numbers to make decisions, to somebody who is challenger, who challenges on the assumption, to somebody who is architect and builds, becomes part of the, building the business case, or not even business case, the whole initiative, and how you approach the market, how you go to your customers, etc. And to a certain level where you're yourself a transformer, meaning you are leading the change. I think that's an evolution which happens and depends on person to person, organization to organization. But I think being a team player, bringing more dimensions to our own, suggestions, I think helps sail through, a lot of these difficult conversations. That has been my experience.
Sure. So, one thing that I am reminded of is that when you really want to do strategy well, does it make sense for a CFO to sort of take a sabbatical from the role or do an additional role in terms of strategy? Maybe then we all wear a non-finance hat, we drive strategy, and then maybe we can always come back to the CFO role. What is your view, Tarun, in terms of wearing a non-finance hat, taking up new roles? Like, for example, one thing I am reminded of is that during my earlier tenure, the CFO came to me and said that, do you want to just take up a business role? It gave me a very, very different perspective because, suddenly, you're dealing with customers. Suddenly you're selling, right? Obviously, we all need to sell in our roles, but selling is a very different animal. What are your views? You think that we can be better drivers of strategy if we take up something like this, or you think it's fine? Anyways, we'll do it in the role.
Very interesting question and very relevant question, and it's a difficult one also because most of the time when we play a role and reach this level, it's very difficult to let it go. But I have seen real examples where some of the finance professionals have moved to take up different roles, and they were successful. They are successful in our organization itself. Our chief distribution officer was leading finance and then moved to the distribution role. And we are doing very good on the distribution side, on the sales side. And I've seen other people also moving to operations, some of the CFOs moving to operation, managing that. The advantage is definitely that when you have a business, number understanding, you can very well actually add value to the various roles. On the other side, when you move to the business roles, it gives you a different perspective also. So, whatever we say that we are flexible, we are open, at the back of the mind, always numbers are going on, right? What will be the impact of this? What is the bottom line impact? How this thing will shape up? How it is going to help the organization or shareholder to grow? But this role shift is definitely can help us. It can be a short period, it can be long period, it depends upon the personal choice also. But if organization can create some kind of opportunity and CFOs are ready to do that, I think it can really add value. On a personal front, if you ask me, definitely I would like to explore something like that. And it depends on the role, definitely. It depends on the opportunity and the situation, but definitely it's going to add value.
Thanks, Tarun.
I wanted to add something, Sushant. Maybe, if maybe a person is not able to do an entire shift and then come back because maybe people's perception of how much time they lose and what expertise they move is different, I would strongly recommend that every quarter actually go and live the life of a salesman, right? Like I know that, for example, some of the maybe leading FMCG and maybe retail guys actually let you go on a route and probably, go and service in the store. Because then what it will help you do is unlearn and relearn and probably adopt what is called Shoshin, right? A beginner's mindset to what is happening in the market. And therefore then if somebody tells customer experience, you can say, okay, I did go to the market day before yesterday and this is what I felt. So I think, as CFOs, I would strongly urge people to plan their time once in a quarter to live the life of a salesman. To know and understand the pulse of what is actually happening in that person's, maybe life and mind, and more importantly, the customer.
Sure. Very relevant.
Yeah, very interesting.
I think, when she was speaking, in fact, I was remembering of my own experience. And I think I had a very small stint where I was working with a company which wanted to expand into Bangladesh. And we were just discussing in the hallway that since it was primarily a supply chain problem to be resolved and, getting there, available there. So I was leading that whole project. I think it gives a very different perspective, and completely agree with both Tarun and Kalpana that I think sometimes we are so fixated about financial numbers and things like that. I think this brings different aspects when you engage with customers, making things possible. It requires a very different mindset. But at the same time, sometimes I feel that being from the finance fraternity and very objective in our decision making, it gives also a big strength in these kind of roles, because you also bring that dimension into picture. So I think it's a very killer combination, I would say, that where you are experts in finance and still go do a business role. So I think my experience was fabulous, and I still long for those kind of small
Yeah,
short
so
spurts.
it's a big yes, right? And Kalpana, you yourself have gone through this whole change, right? Starting from doing audit very many years back to now you're called the chief thinker or CEO and the chief thinker, right? And how did this happen? What happened in your journey? Because this is a mindset change that especially for a finance person, right? It's not easy. Maybe you can share some of your experiences on this mindset change. Maybe interesting for all of us to hear.
Sure, sure. So I'm actually a chartered accountant and cost accountant. I started out in audit and then shifted to completely doing consulting and then technology, and then ran my own startup, and then still continue to run my own business. So that's my journey. And from probably a mindset perspective, I think the most important thing is that don't be afraid to look like maybe you don't know something. I have very often quoted this. I'm originally from Tamil Nadu, and like there is a saying that that what you know is you can hold in your fist, and what you don't know is as large as the sea. So the first thing is you're never going to know everything. So maybe actually have a mindset that you don't need to be right all the time. And it's okay, and that's a learning, and then you move on. So I think that's the first thing that I learned in my life. The second thing is don't be afraid. Because from my perspective, I always treated technology like the algebra's X. I was always worried about, even in math as a child, about the X. What is this X? And then slowly I realized that, look, even technology is just common sense. So I know that, many of you may stereotype this example because a lady is talking about it, but technology is nothing except like working in a kitchen, right? Your entire kitchen, the infrastructure, the gas, everything, is actually the IT infrastructure. So for example, if you don't have gas, you can't cook. So it's as simple as that. So if you want to learn technology, the easiest way, I would say, go and help your spouses, or if you yourself are cooking, then you can relate to it, very well. The second thing would be that different types of technology that you used to do, like for example, to serve dinner, right? So maybe my mom and my grandmom did idli, maybe in a grinder, they were physically doing it. Then I actually maybe went into slightly automating it by maybe getting a grinder, right? But my daughter will probably say, why do you need to eat idli? It's bad for your health, or you Swiggy it. So, like maybe there is a complete transformation from a perspective of how you do things and why you do something, right? So where do you use technology? That's more like a software kind of a thing, right? Last but not the least, imagine that, that you leave something open in the kitchen and you get contaminated food. Nobody's going to eat it. Imagine that's the same thing that cyber security will happen, right? You're actually running your business in your infrastructure, and imagine someone else comes and actually invades your entire kitchen. That's what happens in your security environment. And you want to make sure that the person who's probably, maybe running the whole kitchen is maybe, making sure that everything is spick and span. And that's broadly the application control or the interface, or different sets of people come in and go out, the ingredients, different sets of things. So my view is that the first thing is don't be worried that you don't know. Always ask, because I feel as finance guys, we know innately commonsensical questions. If somebody gives you jargons, just peel the onion further till you probably get the actual answer. And second, don't be afraid. Even if you ask any wrong question or anything, don't be afraid, and you can learn every day, and you can say, okay, yesterday I made a mistake, today I'm wiser. Yeah.
Yeah, thanks, Kalpana, for giving this analogy. Now I can understand why I understand technology, because I like cooking. So that's how I can relate. And it's you have said rightly. It's a common sense. Sometimes people say that, oh, it's too technical, I will not understand it. Everything is common sense. So if you go by that logic, I think it's not difficult to understand anything. Right? Thanks.
I think it's sometimes also a slight psychological change. People say, don't call, since you gave the algebra example, don't call it X, call it something else. Maybe your problem will be solved 25-50% itself.
Precisely.
I read that somewhere saying that don't call it X. So shifting gears, recently I read a report from Spencer Stewart. They surveyed about 1,000 CEOs or so, and they were looking at, and all those 1,000 CEOs were transitioned CEOs, which means either they came from internal business or whatever. Interestingly, they said that business leaders tend to make better CEOs. That was their conclusion in terms of, and not internal CFOs making better CEOs. Anyways, that's their view, and but I'll tell you why they said that. They said that because, CFOs, I think we CFOs have some sort of a bias to focus on cost rather than revenue, right? So that's my next question to Tarun is, how do we as CFOs remove that bias? How do we remove that perception, saying that obviously we need to be cost conscious, but how do we promote growth? How do we be agile? How do we look at competitive advantage? How do we look at risk reward, for example, all of these things? And Kalpana and Pramod, please feel free to add, because it's a very important question, right? Because that is what I think people are looking forward to from CFOs.
Yeah, I think it's a perception which has been made, and that is because of our the action also in past, that CFOs are generally looked as, cost guard or keeping the cost on the side. And whenever there is a cost discussion, always CFO's name are there. That's obviously one of the important aspect of a CFO role, but it's not only the role which CFOs are playing these days. And they are playing important role on the various other aspects also in terms of growth. So just to give some example in our industry, so I'm from life insurance industry, and there is a significant aspect of giving guaranteed in our products, and that has linked with the interest rate scenario in the market. Now, there comes the risk aspect, how we are hedging the risk of our interest rate. And then as a CFO or as a finance team or as a treasury function, we play important role in terms of, going beyond the traditional way of managing the treasury. So going for, forward contract, etc. So therefore, we are also contributing to the business in terms of supporting the product and the sales team to sell those products, rather than just sitting and managing the planning and the budgeting part of the financials. The another aspect is, again, coming from the example from the life insurances, creating a product which is suitable from the customer perspective also, and from the shareholders perspective, because you have to earn at the end of the day profits, right? And therefore, we play a very important role in terms of balancing it, because you have a distributor who would like to get more and more money, you have shareholder who would like to maximize their profit, and you also need to take care of a customer which is sitting on the top of the pyramid. So therefore, you balance it out by taking a big picture view, and you also see that what are the cost levers which you can press so that you can give that advantage to the customer or to the shareholders or to the distributor. So it's a very balancing role, and I think nowadays CFOs are also investing in technology, right? That is also playing very important role and important, input for CFOs to take call, which is beyond just managing the cost. So this is how the things have changed. The scenario has changed, and CFOs are, nowadays playing very important role in overall development of business growth, strategic decision making, and not only consider as a person who's keeping the budget and I need to go to that CFO and get the check signed. Okay, so that's not the role which we are playing right now.
So I think I'll just address two parts. One is, I think I'm not a big fan of averages, and you talked about a survey. So if you have 1 foot in hot water and one in the cold, on an average you are comfortable, but we know the consequences. So I'm not a great fan of averages, but those cases which were surveyed would have their own reasons why they didn't happen. But I think I think very well said by Tarun. I think he touched upon a lot of important points, and one of the things which I also spoke about in the earlier deliberation, that we need to be multi-dimensional. We need to bring multi-dimensional point of view onto the table, and probably I think it's a significant mindset change for us as CFOs as well, because of our nature of work and where we are too engrossed in, sometimes we are looking at that unidimensional view. You have to first also step into a shoe of a business leader and start thinking that if I were the CEO, what should I have done? While developing yourself, and in that process, also you'll have to go through a lot of other information or data points to make a much well-rounded decision for yourself. For example, you may go through industry data, you should go through market share data and see it. So if, say, for example, a capacity expansion is happening in a geography, and I come from an industry which need to be very localized. So I need to see that whether there is a sufficient customer base, there is sufficient supplier base to supply and all those things, and then only you bring a much more rich decision into the game. And so what I feel is it's a journey for us also, where we need to step out from being just a finance leader to a business leader and bring the finance hat also, because I think that brings a lot of strength to and robustness to our decision making. So I think it's a journey, and I think probably we'll have to embrace that, and probably all of us will be sitting in the CEO's role in the near future.
Right. I think totally agree with both Tarun and Pramod, and I like how Pramod said that, look, maybe the report is wrong. I think reports reflect different pieces of maybe, the data that different people analyze. But from my point of view, I'd like to say that, look, when you're a CFO, you're actually trained to look at specific angles. But when somebody wants to move into a CEO, you're actually moving into an orchestrator with much different, views. So maybe in a sense, you're actually moving from a microscope to a telescope, from probably, very verticalized view to maybe a horizontal view, and getting a larger team involved. So my hack to probably becoming a effective CEO will be, how can you actually understand different roles and have diverse perspectives, and then be able to take the same challenger position that you are doing currently. So literally, you say, for example, in a team, first there should be alignment with the CEO saying, look, this is my role, I'm going to challenge you like this, but that's fine. But if, for example, you reverse the role, then who will be the challenger? You have to then drop what you're doing now if you want to be CEO. Therefore, I think it's very important to develop your team so that when you each move to CEO, they can still function with the verticalized whatever you leave behind from a succession or a legacy perspective.
And that was my last question, actually, saying for us to do all of this well, right, you need to groom the second level. You need to reskill people. You need to have a good succession planning mechanism, right? So what are your thoughts on all of this, right? Even, I'm saying, irrespective of whether it's a CEO journey, I think we all need to do different things at different points in time, even to be strategic, not necessarily a CEO, but just to be more strategic, you need all of this. And finally, you know, and for all of this to happen, technology obviously plays an important lever in all of these things. So I'd open the floor to all three of you saying for the final question, saying that, because I think that's very important. Otherwise, we will get stuck where we are.
Yeah, it's very important to have a very strong team under you, because when you are required to actually get involved in various decision making, which is not only related to finance, you need bandwidth. And in order to get, when you can only get a bandwidth if you have a strong team under you who can take a responsibility and ownership. One of the important aspect which you know, I feel should be there in your team is the ownership and responsibility. Obviously, when you have a team, you are hiring financial controller or any other person, they are technical competent. But technical competency is not only the thing which you are looking, it's the complete ownership and the responsibility of the role which they are playing. So that they can, you get a bandwidth. And also, it's very important that when you're talking about the succession planning and the growth of the team under you, it's very important that they also get involved in some of these decision making. They also get a time to go to various business function apart from what they are doing on BAU kind of a role. Because that will also give them perspective, and that will also give them you know, chance to grow in the organization and learn various aspects. And that will create a real successor for you, because when, let's say, you are moving out or you are getting into a new role or a different role, your team and your successors are ready to take your role which you have been playing. So, and technology definitely is playing very important role, because most of us are trying to automate various things, making it more and more, less and less human dependent, which gives a lot of green time to people now and team. So when you have a green time, you can actually invest that green time in terms of understanding various processes, business processes, technology also, and look at the various, you know, connecting dots from the current and the future outcome of those decisions. So I think these are very, very relevant, and it's very important to actually spend time and invest in that. Sometimes we ignore this human element or the people development element, but I feel it's one of the important aspects which any leader should have, and CFO, as we discussed in the first session itself, CFOs are leaders. And therefore, it's very important that you spend significant time in your day routine job or in your KRA on developing the, you know, team under you, or developing the leaders under you, or developing that kind of mentality and, you know, kind of building a team under you. Thanks.
So I think most of the points have been covered by Tarun. I think the only piece which I want to add is probably capability building is the first strategy you would like to work on. And that not only for finance, but also for the entire organization. I think from capability building or bringing enablers, mainly technology into play, not only for finance, but for the whole organization, I think should be top of the agenda for, I think, the whole management team. So I think from that perspective, we'll have, you know, that's a very important, you know, dimension to work for, so that, like you rightly said, you release time for yourself to do, you know, such work and, you know, the value added part of the thing. So without a doubt, it's one of the key levers which we need to, or one of the most important lever, I would say, to work on.
Right. So I love movies. I know most of the CAs also love movies. I don't know why. There is a huge correlation between CAs and movies. But anyway, coming back to the movie example, I think technology can make maybe an Iron Man, right? It can actually give you a suit and an armor to make you like Iron Man. I mean, hopefully not die in Endgame, but at least make sure that you're able to perform maybe much better utilization of each of our time. So I would think that there are two critical things that come to mind when you look at capability. One is maybe the entire succession planning and having probably people who run it like they own it, right? So that's the typical phrase that we use for ownership, right? To say that, look, can the finance guys run this like as though they own the company? And if they are doing that, then I think each of us as CFOs then can focus on few other things as well, and then have a few things to do with finance rather than trying to figure out whether, the trial balance is matching or account reconciliation is not there or something is not there or treasury is not there, not working all right. So I would think invest in probably understanding technology and building your own armor like Iron Man to see whether are you going to improve efficiency or you're going to improve effectiveness, or are you looking at a combination of both, right? So as a CFO, what are you trying to do? So I would think that those two things. First, look at people and make sure that you actually allow them to run it like they own it. And second would be, apply technology to, maybe make each of your colleagues in finance and in the organization much more powerful than they actually what they can do, because 24 hours is what everybody has, right? You have to sleep, you have to do, you have to take care of your loved ones. So then the balance, then can you be more effective in that time using technology?
Thanks, Kalpana. You're right. All of us love movies. And on that note, thank you, Kalpana. Thank you, Pramod. Thank you, Tarun, for this engaging discussion. And
Thanks,
we'll
Sushant. I think
Sushant.
awesome questions. Big,
Thank you.
Thank you to Financial Express as well for having us all here. Thank you for the learnings.
Thank you.
Over to you, Priyanka.
Yes, I think we have time for one question from the audience. So, do we have? Okay, can we have the mic, please?
I'm Prashant from Suvidha, a fintech organization. So Sushant, I think so, I've been hearing it like big picture, strategy and everything else. But when the industry in which you are is a very interesting, matrimony. So how would you as a CFO strategize, because in the matrimony industry, if you give customer over service, then probably he'll get married and then leave the membership. If you underservice it, he'll bad mouth and then other customer will get impacted. And if you don't do anything, that customer will keep repeating, which is not a good sign for a platform like a matrimony. So how would you strategize as a CFO to balance all these things?
Sure. Firstly, I think there's nothing called underservice or overservice. I think you need to give the right service. In whichever business, I think strategy should follow what we call the right service. So in the example that you brought up, right, our view is that we want people to get married, right? And for that, we need to provide them the right experience, the right platform, and the right tools. So be it if they find a life partner in 3 months, so be it they find a life partner in 9 months, because they may have various preferences. So our job is to give the right service for their preferences. So that's the way I would also relate to strategy as well, right? Strategy needs to be right. And that's my whole thing, that if I don't do the strategy right, then what will happen is I will not have new people on the platform. And that's when I will have to think of underservicing and overservicing, right? So then I'll have to think of other ways. Then I cannot survive as a business, right? So we've been here for 22 years. Unless you do this, I think any business for that matter, you have to think about what is right for the customer. And I think the rest of the things will fall in place.
Next session, which is CFOs driving data for change, exploring new vistas to resilience. And this will deliberate on the sudden outbreak and the ongoing challenges of the pandemic, underlined inadequacies in organizations' operational strategies.
Incredibly nice that you could spare time for this very important session, and given the deep experience that you've had, whether it's in Narayana Health, whether it's Zydus Life Sciences at Prism, this session we want to utilize to get a sense from your own personal experience about how you dealt with the the crucial pandemic months, the pain points that it rose and that they triggered, and how you try to get a fix on that, and then we go on to look at other elements. So if I can begin with you, Ms. Sandhya, is that how did you look back when you look back today? Of course, there were lots of surprises during the pandemic months. What are some of the changes that first share your thoughts on how this period was?
Okay, so first of all, I'm speaking on behalf of another CFO who was at the helm of Narayana Health at that point in time. I joined after the thick of the pandemic was over. But having said that, when you talk about the pandemic, most of the time people speak about liquidity, people speak about digitization, and I'm sure some of our speakers will be speaking about that. So I want to talk about something a little different about what I thought Narayana. We took purpose above profits as a motto at that time. So Narayana took a call that, for example, when the vaccines had come, government had not brought a price cap at that time. But we realized that it cannot be a mode to make profits just because you're not having adequate cash flows. So Narayana was, I think, the first institute that stepped forward and said, we will do vaccinations at cost. And Narayana set an upper cap on how much we can charge our patients during the pandemic. So actually the company incurred a loss that time. We did not recover the overheads that we were losing in other streams, elective streams from the pandemic patients. But that's not what I want to talk about. What I want to talk about is when you put a purpose above profits. Normally we say that, analysts and investors have an Excel sheet and they just plot numbers in an Excel sheet and your numbers go down and you take a beating. I think a refreshing aspect of the Narayana journey was that there was value given to that spirit which the company adhered to at that time, and the investors were with us, the analysts were with us, we were supported through the journey. And then when we recovered and we came back from the pandemic and we started recovering our cash flows, I think people could see that the journey was going to come back and they were investing still in our future. So one of the biggest learnings for us, I think, during the pandemic, of course, all of it, the healthcare industry was the worst affected. At some point in time, the hospitals were empty. Then the hospitals were there, but the staff could not come because they were sick. Patients were there, the staff was not there. So we've gone through a big journey, and I'll talk about it a little more when we talk about how the pandemic has changed us for the future. But I really feel that organizations that put purpose can also lead that example into the capital market.
Yeah, I think very important point. But to be fair, when you, as Narayana Health said that purpose was important than the profit, you have also a brand name. You had a certain brand understanding. If I want a cardiac operation, okay, you would think of Dr. Devi Shetty, the different doctors that you have. So maybe not today during the pandemic, but post-pandemic, I'll get my, aorta repaired. I'll come to Narayana Health, for example. So you had an assured, because of your brand, you had an assured market in future. So perhaps that element also drew purpose to, so there are different companies. Say SME may not necessarily be that equipped to put that. So there are, I think so, but it's a very important point. Mr. Nitin, your thought?
Yeah, first of all, thank you for the opportunity from Financial Express for entering with so many learned CFOs around. Zydus corporate slogan is dedicated to life. And I think this was a fit moment, to live up to that slogan. Just in March 2020, when lockdown started, my chairman Pankaj Patel told me, Nitin bhai, how are you going to manage the business? So 3 objectives were specified. The first being continuity of business. We said that there are patients, there are people, and we have to ensure that business continues to serve our major interest. Second, how do you control cost? Third, how do you conserve cash? 3 C's. And I'm happy to note that all three objectives we worked very well. Pharma as essential services was allowed to continue even during lockdown. The initial challenge was how do we convince all the employees and workmen to report for the duties. So the top management team led by example, they themselves went to manufacturing locations and say that, so we are here with you, and convinced all the employees, also sold this philosophy to them that why it's important for all of us to be in the office and to be in the manufacturing locations to serve the larger public interest. We were amongst large players in HCQS first, also in Remdesivir, one of the largest in the country. So the huge demand for our products. We did it very well in terms of maintaining the continuity of business operations. There were challenges from supply chain, freight cost increasing, export freight becoming almost 3 times. But we increased the inventory, managed working capital well, and also did well in terms of control of cost. And most of the doctors were not operating their OPDs. Hospitals, as Sandhya also mentioned, also had lesser patients coming. We reduced our marketing spend, traveling, etc. In fact, in April to June, in that 3 months quarter of 2020, our EBITDA was improved to 22.4% from 18.8% in the same quarter last year. So that was the cost reduction impact. We also had a significant impact in terms of conservation of cash. And I will talk about later if the opportunity arises. But we, in a formal manner, established liquidity management office, and actually it paid wonders. So we had, on all the 3 aspects worked. Some of the lessons were that, office people later on started moving on a work from home, angle, while most of the seniors were still coming to the office. Our desktop to laptop, the transition that we did just before a year prior to that actually helped us. Extensive use of Team, Zoom, WebEx, etc. I think we realized the power of technology and digital at that time. Thank you.
I think very important. I think, and I'll come back to you and Ms. Sandhya about the business continuity, containing cost and conserving cash. Very important points you said. What's been your experience?
India is such a big, huge country with so much of population, rural, urban divide. It will not happen, but it did happen. And so the first immediate priority was liquidity, to manage over liquidity. So we were like working overboard on that. So there is a quote that cash is king, but I think at that time the cash was emperor.
Cash was emperor.
Okay. Yeah, whosoever has the cash, that was the point. So we did some fundraising during that time, though it was tough because everything was closed, businesses were closed, offices were closed, but we did that. So we I'll say managed liquidity we over managed the liquidity. That was the major point. The other point which we worked upon on cost. See, normal budgeting scenario, what happened, because it was in March and we just closed our budget in February. So now, every year what you do, normally you take a last year budget and you see, you take inflation 5%, 10% increment, and then the budget is get made. But this whole pandemic, when this everything was closed, it gives us enough time to look into each and every aspect of the cost, each and every aspect process, and we're trying to see what is required, what is not required. So it gave us lots of insight, lots of processes which we were thinking of seems very, very much important. But when you go down into layers and you see, there are certain things which you can do without that. So that we were able to save lots of cost. Some certain cost was, I'll say, for a temporary, for that lockdown period, but there are certain processes which we change, which has an impact on a permanent basis. So that was another basic important point was that. The third point was on adapting to new technology. Even the whole closing, in fact, when we're talking to auditors, they say we need to do physical verification at the March end. It's not possible. Everything is locked. So video recording, we help. It was that video recording was helpful in doing the physical verification and the financial. So these are the 3-4 things I'll say, which was new thing for us.
Okay. Just curious, actually, I'm just curious. See, for example, in Sandhya's case, as an healthcare, as a hospital, for example, the challenge was not getting the elective surgeries and cardiac and other, procedures done. Complete loss of revenue there. In the case of Zydus, for example, for a pharma company, the question of snarl supplies not happening and inventory not being there. In your industry, what was, similarly?
See, for us, all the business totally closed. So for, I think, first 3 or 4 weeks, there was no sales, no revenue, nothing. So in fact, the whole factories were closed, all sales offices were closed. So there was nothing was moving. So that was the cash was very, very important for us to conserve.
Okay. So when you don't have cash, you still have to pay salaries, you still have to pay vendors. How did you deal with that problem? If you could, give your experience or anything else you would want to add on that.
Sure. So I think one is that the ecosystem, adjusts a little bit. The working capital cycles adjust a little bit. So to that extent, they are able to prioritize. The second is, I think and I know I'm not speaking for an SME, but, the banking channels were little more accommodating, whether it was your OD limits, whether it was your ability to take credits at short notice. So there was little more accommodation in the banking channels, which helped. Thirdly, I think a lot of cost conservation happened. So many times a lot of investments go behind growth. So there is, like he was very nicely articulating, every line element of cost we could reopen and see whether this cost is absolutely required or not. Can I not spend this cost? So that activity itself helped bring down a lot of cost elements down. So that also helped in terms of, and that also helped with opening our eyes to say, okay, this cost can actually be even in the longer run, reduced or avoided. So it even had a future effect to that exercise. So a lot of organization bandwidth got reprioritized into looking at costs and cash flow a little more tightly. And I think most important is that the cash flow awareness across the system changed significantly. Prior to pandemic, cash flow was only a CFO problem. No one ever cared where the money came, where the money went. People used to look at sales, profit, okay, good. From there to everyone looking at whether I have cash and how, for me to spend. That culture, I think, changed in organizations, and the remnants of that is still there. So I think that's also, that helped.
Very important. So cash flow, I think awareness is important. Nitinji, what you also referred to liquidity. So what specific measures you put in place and how that is going to be now sustaining?
So when the lockdown started, very interestingly, my chairman told me that, Nitin bhai, at any point of time, I would like to ensure that we have 6 months salary in our bank account.
6 months salary?
6 months salary to take off employee. So the employee concern, that's the first concern. And incidentally, my annual total manpower cost bill is 2,400 crores. So we had 1,200 crores in bank. And the challenge was, and we actually meant that not a single rupee it should go down. So the way we worked is that we did get projections of all cash inflows from all revenue generating units, cash outflow from the all cost centers, manufacturing, overheads, administration, finance, supply chain, etc. And we will give the commitment, and this is again a soft commitment, not a final commitment, based on week 1 inflow, we'll give you commitment for week 2 outflow, and so on. We said these are the indications. Final numbers will be given only when actual receipt takes place. So when I have 1 week 1's balance available, again keeping 10 to 15% contingency out of that, we'll release 85%. And then there were 5 priority areas decided, again in the order. Number 1, employee payments. Number 2, payments for raw materials and services. Number 3, freight, insurance, other cost, which are again business continuity angle. 4th was in terms of all statutory payments like income tax, GST, etc. And 5th, debt repayment, debt servicing. CapEx, we also rationalize, postpone, we'd say whatever can be postponed, whatever can be reduced, and say this is a bare minimum. We change the authority level for CapEx for the temporary period, saying that let it get its own seriousness. We work on 3 months rolling forecast of sales, profits, inflows, outflows. Everything. Okay, then worked on a daily basis across all the subsidiaries. We have subsidiaries in US, Brazil, Philippines, Spain, France, many countries. On a daily basis, I will get their actual receipts and we'll get their information. Daily cash position statement will go to top management, including chairman and MD. We'll work on sensitivity for all the projections for 3 months on rolling basis and worked on 4 very important parameters on a daily basis. These 4 parameters: collection to sales, today's collection, today's sales, sales to production, production to purchase, and purchase to payment. If you can master these 4 parameters, the entire working capital is in your control. The beauty of this entire exercise was that apart from the very sound liquidity management, we could get a lot of insights for the businesses across the world. Let's say how, payment norm works in Brazil. What is the real versus Brazil? What is the inventory level they are maintaining? How frequently they are changing? What is the reorder point they are having? And these happening across the globe for all the subsidiaries. You can understand the power of business insights indirectly we got in this process. And that process on a daily basis, while in the finance department are doing, even today on a weekly basis, the report goes to the management. And the process is now established and we are carrying on this process. The direct result of this was from April 20 to December 20, 9 months period, my net debt was down by 2,100 crores. That's the way we manage this in a beautiful manner.
That's incredible. I think that's really very nice. So,
Just to add on this point, what he said or she also said, see, the insight was given to the management on the importance of cash flow, and instead of people looking into profit, they started looking into cash flow. So from top to bottom, everybody started looking into cash flow. What is the incoming and what is the outgoing? Otherwise, in past, the most important thing was profit, EBITDA, how much the margin. But now this time, during this whole period, margin was not important, the cash was more important. So that is one. Second, during that same time, from liquidity point of view, even the banks and RBI, they were quite open, and the liquidity was, I'll say, from government side also, from RBI side also, was over-managed. So I think from the market perspective, there was no dearth of liquidity available. So that was another good thing for the corporates actually.
Absolutely right. And in fact, just as a measure of contingency, we had lined up $200 million line in US, just as a precaution, nothing doing. I'm saying in Keynesian economics, I learned that there are 3 objectives: transaction motive, precautionary motive, speculative motive. I think after passing that, graduation for the first time, I use precautionary motive.
That's very nice actually. And it's important, as was mentioned, that move shifted from margin to money in terms of, that's important. So when you look in terms of now the newer imperatives which have come, I mean, we've had discussions about now post-pandemic, now when we return back to normalcy, this is a changing world. Now there's greater awareness on climate change and all of that. So ESG will come into our lexicon. CFOs will have to talk about other elements. Now, what are some of the newer elements that you are seeing that today a finance head in a company has to be aware of? Not necessarily a concern at the moment, but going forward will be imperative.
Sure. I think one thing that the pandemic set organizations is that into a accelerated digital journey. So if I take the example of Narayana itself, when we were in the middle of the pandemic, I think we decided that we have to make our doctor being able to reach the patient as digital as possible. So we created a digital capability that the doctor can actually do his ICU visits from his mobile phone sitting at his house. When a blood draw happens and the blood is put into that blood machine, that very minute the doctor gets the report. So some of those digitizations that we put in, then we could build on to the next level, which is that there is a lot of data available in the system. Now the process is digitized. So now the doctor on his app gets a risk score based on data, which is to say that this patient is in the ICU. This patient has a 5% probability of having complications in the next 24 hours. So we were able to create that predictive analysis. So things like that. So when organizations are on this, and there are many, many other such use cases on what digital has changed, but from a finance person point of view, I think the big mindset change that had to happen was IT is no longer a cost center or a budget. You can't tell your IT head saying that last year your budget was X, this year I'll give you maybe X minus 5% or X plus 10% and go figure. IT is in fact, while we are a healthcare provider, we call ourselves as much a health technology company as much as we call ourselves a healthcare provider. So a lot of the perspective of looking at IT instead of as a cost, but how do I realize value for our IT? How do I ensure that we are able to turbocharge the business with technology? I think that's a big change that has come from the pandemic, and I think it is here to stay and sustain. Now, few themes which were earlier also existing and which are still building on now in today's sustainability is an important theme. Of course, there is a lot of talk about greenwashing, etc. But I think sustainability is not just about taking some money and doing some work in some place and saying, I have done this, or moving some areas to renewable energy. But seeing that how can a sustainable business model be part of the business itself? And I spoke about purpose earlier, but so sustainability is a much larger theme, and I think as finance professionals, it's very important for us on how we can dock ourselves into the journey. So today, we are writing our sustainability report for last year, and I'm actually sitting and writing it along with the sustainability team, because I think if there is one person who has a 360-degree view of the organization along with the CEO, it's the CFO. So therefore, if the finance person does not own the sustainability charter, because sustainability is about purpose, but it's about communicating what you're doing in an efficient way, effective way, that's then the virtuous circle of, the value comes into the organization, we start seeing what we're doing, investing behind it. So that another important aspect which is coming. The other piece is this data to insight to action journey. One may ask, saying data was always there. We've been speaking about data for ages. So what has changed? I think 3-4 aspects have changed. One is data access has changed. A lot of digital points which were earlier, the entire network of insight, which leads to insights, was half digitized and half manual. So with the pandemic enabling, a lot of digitization has happened. Second is that predictive capabilities have become extremely efficient. So we are able to do a lot with data which we were not able to humanly do before with the help of predictive capabilities. Talent, people have started investing in data knowledge. Talent is an important aspect in the data journey, and I think the amount of people, if you now go to LinkedIn and see, at least some data tag everyone has to their name. They've done some course on data, learned something on data. So the talent paradigm in data is also changing. And finally, I think now data has a financial business case. You can say that I invest and this is the return I can get. So there is a financial business case that data is starting to create more powerfully. So that again is a newer paradigm which is evolving and becoming more and more integral. And I think as finance professionals, as CFOs, it's very important as to how we dock ourselves into the organization data journey. It's not about just seeing which unit is making how much cash flow or profit, but seeing that how every element of the business can be efficiently, effectively managed, revenue can be improved or cost can be reduced using data. So I think that's another important theme that is emerging and developing.
Very important actually. So in some sense, as you said, with data visualization and all, actually we have a situation where engineers and doctors work together, isn't it? In some sense, that is also in many ways changed, especially I think in imaging, the kind of AI that has penetrated. Nitinji, what would you say about?
So in Zydus, I handle finance, IT, and legal functions. What I'm telling is that I am in little beneficial position to talk about ROI of IT initiatives and especially digital, because
you
not
deal
very
with
easy.
all the toughest functions.
Because
finance,
it's like
IT,
I
legal.
propose and I second. So on a digital, we carried out, complete maturity, study as well as the roadmap. So typically, it works like in the first phase, most organizations talk about the operational efficiency of the digital. The second is where how you do business partnering role. And third, which is obviously high level of in terms of business transformation role. So we are at the second level as of now. We are working in the partnering role, but there have been a number of other initiatives taken in terms of the third level. We know that in times to come, the way pharma industry will work in the country will be very different with the use of digital tools and technology. So we have two platforms now, being implemented. One is the connect from the company to doctors. So it's doctor, from pharma company to doctor connect. Another is from doctor to patients. So they are at very advanced level. In fact, something is already implemented and more traffic is likely to come in times to come. So we have taken major, initiatives in that direction because that's the way the business models in tomorrow's world will possibly work. All our medical representatives now work on the tablets. The old system of, writing down pre-printed materials and all those things have gone. The data with the inputs that they got from the doctors are centrally taken to the database for business intelligence in terms of what are the views, etc. So many things are, under working. When during lockdown we worked on a cost rationalization, we implemented zero-based budgeting, and I was the pioneer. In fact, I was talking about zero-based budgeting for 3-4 years in the group. I was actually warned by most strategy consultants in the country that there is no organization who has completely implemented it, in all the functions and all the divisions. But I took the challenge for my India formulation business, and I'm happy to report that we are likely to get 3-digit crores rupees of kind of annualized savings on that. That's the kind of ambition of working, and mostly likely to be realized in a year or so. I'm the sponsor of that project. And the way it seconds the organization, obviously you will get a lot of resistance initially, but once you keep talking about the purpose and the long-lasting effect of that, I think people follow and accept that. So that was the second, important. Third was in terms of how the cash liquidity, profitability gets managed on a regular basis and monitored. So a lot of dimensions came in terms of specific aspects of working capital in terms of looking at credit period given to parties, credit period taken from the parties, and also use of certain technology platforms. Like we have been selectively using online vendor discounting platforms also for better realization for our treasury. So we want to make early payment and get better returns. So we have been also using online platforms for vendor discounting. Also, a lot of many things are done in terms of streamlining financial processes. We have now our own center of excellence to take care of all the finance and accounting processes, transaction processes for the entire group as a central source, and been implementing various tools, including vendor investment management, S/4HANA, and other things in that. So very interesting, exciting journey.
Yeah, that's really nice. Congratulations for some of the unique things.
Just to add on that, so I think the major benefit on this whole thing was impact on IT budgets. Every company has, I'll say, increased their IT budgets, and it was...
Our mics don't believe in distancing.
Yes. So that was on a lighter note, but from a business planning perspective, let's say now the whole budgeting process have changed. So now we are talking about planning for any other shocks which can come. Say after the first wave, second wave came in again next financial year. So by the time I'll say December 20 or January 21 came, everybody was back to normal, everything was normal. But again suddenly the second wave came. So now whole this planning has changed. So people are, or businesses ready to take care of new shocks, or as well as how to manage those unexpected things. So that is another learning which is there. Second, I'll say from a risk management perspective also, like say every company is today have a ERM plan or ERM program, but I don't see any of the company could foresee what is going to happen. So we had all our predictions, what's going to happen, but this kind of thing was never predicted. So now the ERM tool is also being, I'll say, going in more in detail, and we are using ERM as a more of a, I'll say, business performance review actually. So going more in detail, it's not like you need to do once in a quarter and report it to board or report it to risk management committee. But now the ERM tool is being used on a day-to-day, I'll say, from a business performance perspective. So that's another change which I'll say. The third change which I'll say, talked about emotional health, well-being. Nobody got talking about that
Yes.
part, work-life balance. So hybrid working, I'll say, it's more of a culture. People have not even thought of earlier that can we sit home and work, or if somebody is working from home, it was taken as he's on leave. But today you have a genuine need and you can work from home also. That's also has been proven actually. So these are, I'll think, 3-4 things which will continue in a longer term also.
Absolutely. I think for we as journalists, work is where the Wi-Fi is. So I think it's very important. Last point, if I may, while there's so much more actually, in fact, I was trying to put down notes and ask, but just if, while you are also the supposed to be experts on compliances, regulations, all of that, I mean, there are so many things that, that you need to be knowing. If there was one thing that you would say that, keeps you up at night, what would that be? That would be my concluding thought, perhaps. We can perhaps think about it, and hopefully the organizations will be a bit more sympathetic on that.
There are many things that keep you awake at night, but I think the top will be cash resilience.
Even now.
Huh?
Even now.
Even now, because there is a lot of, I'm not just speaking for healthcare, but the pandemic has taught us that anything can happen. You would not have thought in your ERM plans, and all organizations, I think, after the pandemic went back into their, what they considered as part of their brainstorming in their ERM, and they rejected it as, will not happen. Many of them had, a pandemic, a black swan event in that list. Most people took it off their list of risks for the organization until it materialized. So I feel that always as finance people, we have to be very cash resilient. Also because we are always prioritizing cash. So when I am taking a decision saying that no business will be cash positive from day one. So you will go through a cash burn cycle, then you will go through a cash positive cycle, and then only you will go to a profitability, and when you return back cash cycle. So we are always prioritizing and making investments considering a longer term outlook that this is how the business is going to run for the next 5 years. And there are so many assumptions that assume steady state or assume that what we are doing today we'll be able to do more of. And that fear is always there, that when you sign that check or when you put that big investment, that I hope we are able to have the cash resilience to see it through.
Oh, that's very important. Mr. Parekh, what keeps you up at night? Very briefly, if you can.
So, to be very frank with you, actually nothing, makes me awaken. I sleep very well. Just in 5 minutes, I'm in bed, my wife says that Nitin will be in full sleep. Having said so, the areas which normally need a priority or, where we spend more time and which becomes little, measure of anxiety, if not concern, is the change itself. The way changes are happening, and you look at macroeconomic situation, political situation, compliance, regulatory situation, new
Social unrest.
LODR, new notification, severity circular, on promotion to doctors onwards. So many things keep on happening. These are the areas which need your more than proportionate attention in terms and allocation of time. The second is that for companies like us in pharma who have been doing reasonably well in terms of profitability, while cost remains a day-to-day program, as a part of culture, what is now important for us is in terms of the growth. We are more concerned about the growth than the cost. And we say, how do we keep growing the business? Now, to an extent, you find it a little contradictory in terms, if you look at the larger human interest, that should we be selling more medicines, right? And you can understand the disconnect, right? Should there be more patients? That's not the way actually it works. And therefore, what kind of unmet needs are still there, which you can address? That's the larger purpose that we are looking at. And I'm very happy to note that Zydus is amongst very few Indian companies who are working on basic research. We are the first Indian company coming out with our own new chemical entity product, which is also already commercialized in the country in the name of Sarogetajar, and working on the global trials in the US and other countries. Right. So that is the purpose. The promoters, the management, they are all innovation driven and also technically very competent and sound, and that's what is the growth, that is the mantra, and other things just follow.
Excellent, I think. So you, Manishji, last word, very briefly, what keeps you up at night? We'll conclude with that.
Same way, like nothing keeps me awake in the night, but yeah,
Lovely, you're blessed.
the issues which are concerned basically is still on liquidity side.
Liquid.
So last 2 years with pandemic, wave 1, wave 2 coming up, and then last 6 months with Ukraine war and then supply chain issues. So the whole planning has gone for a toss. You never know. So everything was going well, then suddenly this Ukraine war happened. Fuel, coal prices have gone to top. It is multiplied by 4 times. So all those things, I'll say for last 2 years, things have never been, I'll say, settled, or we can't say that everything is back to the normal kind of thing. So every time something new is coming. So that is one on. That's why you would always have to be higher side on the over managing the liquidity. And second, also on compliance, because the way things are changing with new rules and regulation every day from SEBI, from Companies Act, from income tax. So that's another worry which you have. But both the things can be managed. It's not like something which you need to be losing your sleep on it. But yeah, so from compliance, if you have a proper control built in the system, you have a proper tools in your financial modeling and financial database, so compliance can be taken care of. And at the same time, when the learning which we had from pandemic on how to plan unexpected, so these things help you in managing your liquidity and cash flow also.
My God, amazing. I think you are incredible leaders to be surviving and growing and doing so much in times when uncertainty is a certainty. Is amazing. So thank you so much.
We all know that the impact of COVID-19 pandemic has pushed the need to accelerate digital transformation measures. But this has also underlined the need for creating immediate and large-scale workforce and skill challenges. How are CFOs handling this need of the hour? Let us now find out in our next session, which is the digital upskilling, securing future-ready workforce.
So let me start with, try to make it a little interesting. So I'll start with the sporting analogy. So we as Indians used to be like gods in hockey. Like we used to we won everything that could have been won till a time, like 1976, I think, when AstroTurf was introduced. And our advantage was gone, and it took us close to 44 years to again win another podium finish in Olympics. So because we were good at certain things, but suddenly what happened that the rules of the game changed, the controlling parameters which are kind of ruling the game, that changed. So which meant that the skills which we are good at no longer remain kind of viable in the changing environment. So bring that to our current, situation that we are in. So we'd like to kind of, start with the idea of understanding first what are those changes that we have seen over the last 3-5 years, and not only limited to your finance function, but overall at an organization level. So we'd like to first start addressing what are the changes, and then we will see what we need to do to upskill our people and what are the things which are required. So if I may kind of, request you to share your thoughts on what are those key changes that you are seeing in your specific industry, in your sector over the last 3 to 5 years, let's say.
This is actually what I should say, very mixed question. 3 to 5 years is a horizon where we saw a lot of good changes. We saw penetration of smart mobiles. Everybody was carrying a computer in his hand, cheap data. So a lot of businesses like our business were enabled. We were beneficiary of this change. Second event, which was a bit tragic because of 3 to 5 years horizon, I would say we all witnessed COVID from 2020 onwards, which did brought tailwind to a lot of digital transformation, digital initiatives, digital businesses. But yeah, so this was, I will say, kind of was a silver lining in the dark cloud. Yeah. That is how I will put it.
I'll go back to the year 2016 when the demonetization happened, and I think that was the cusp of digitization happening in the country. So with the digital transformation happening on the payment apps, etc., I think that's where we started realizing that there's much more that can be done through the digital transformation. And and pandemic further enhanced that. We never thought that at any point of time we'll have our employees sitting out at remote locations, working not only 8 hours, maybe at times 16 hours in a day, because of the situation that was in hand. So I think last 2 years has definitely told us that there's only one constant, which is change. So that's what the digital parameters are talking about. A lot has changed in the last 3 to 5 years. If I look at my industry, which is an automotive industry, we've seen a lot of changes happening. We have recently introduced a selling online platform where the customer can, without even visiting the dealership, can have the cars delivered to their their residences, and we've been doing pretty good in that. And a lot of customers have come back and said that that's a definite change which is coming into the market. Never thought that a car could be purchased online, but that's happening, though albeit in a very small percentage, but it definitely is happening. So I think change is the constant, and we'll see much more disruption happening in the future.
Hi. So it reminds me of the sci-fi movies when most of us were young. We saw drones, space travels, and we saw many such things, which has become reality. And to build on your point, it's a reality that today many of the things which we have not envisaged, say as recently as 5 years back, are happening. So very clearly what we saw was being in Thermo Fisher, which is the world leader in science, and it's a US company. We supported a lot in the COVID scenario when COVID happened, like from RT-PCR kits to vaccine manufacturers to medicine manufacturing. And the biggest challenge which I saw was the supply-demand situation, where the demands from all the key vaccine manufacturers were significantly high. And we clearly saw that the capacity can't be increased in such a short period of time. So we came with innovative ideas where how can we localize many of the things which is what is urgently required and being close to the market kind of thing. So we localized the manufacturing of RT-PCR kits, where we had in more than double-digit market share in the country. So this year taught us a lot. This year taught us a lot how to be agile, how to be resilient, how to be closer and understanding the customer and consumer needs. Because our mission is very clear, is that we want to enable our customers to make world healthier, safer and cleaner. So on that motto, we continue to support many of, in the health space, many of, almost all of the manufacturers, be it in vaccine or medicines, or even in labs, to set up equipments to do the testings and all those things. We were agile and resilient enough to ensure that we are there for the country when it needed us the most.
I think, somewhere between 2010 and 2014, I think if that period, I think that's where a lot of things sort of were falling in place. I still recall a time, must have been about 2010-11, before your wallets and everything came into picture. I think one of our bankers wanted to test a mobile payment application. Okay, so they came to us and said, can we test it in one of your stores? Like, who is going to use a mobile phone to pay? I mean, let's be practical, but fine. I mean, you guys can try it out, And today, with UPI, I don't think, at least I don't think I owe even 1 rupee on my wallet right now. So I think we're completely transformed, and that's happened in such a short time. The other transformation that happened was, I think, the emergence of e-commerce as a platform. So till about a particular time, for us, knowing your customer meant knowing our distributors, knowing our partners, our channel partners, our wholesale partners. But today it's all direct-to-consumer business. So it's the consumer, the end consumer sort of direct. We are focused on what that end consumer needs. 10 years back, we didn't have an insight into that. But e-commerce has changed the game. E-commerce has really given us direct access to the consumers sitting anywhere in the country across 20,000 pin codes. And I think that has changed the way we look at our business, and that has changed the way we all think about how we want to solve a problem.
Thank you. Very relevant points, actually. So now, see, what you mentioned that change is the only constant, maybe. So if that, so much changes are happening and is happening at a rapid pace, that means we as organizations need to adapt ourselves, right? That means there are certain changes that we need to do, be it in terms of adapting to new technologies, be it in terms of new processes, etc. So my next thought on this is that, so what are those, some of the key marquee changes, be it in terms of technology, be it in terms of, let's say, processes that you have seen in your organization, which has kind of helped you to stay relevant in this kind of, changing environment?
Yeah.
So maybe we'll start with you, Narayan.
Yeah, thank you. So let me very clear, we are fortunate in being that era where a CFO carries the same targets as the CEO, and we are a co-pilot to him. So if you see in that journey, we have created many things like DABI, data analysis and business intelligence, is something very critical and core to the business decision-making tree right now. So I think around 15, 20 years back, we would have done the decision on the basis of a hunch. Today we go through zillions of database to identify what is the right market to go, what are the right competition, and what are the kind of products which you have to go. Because we have to have our right products for the right customers at the time. So digital data analysis and business intelligence has become one of the key factors in supporting the business growth, which has to be competitive, profitable, responsible, and sustainable. Second, very clearly, is that there are many processes which are, say, accounts payable, accounts receivable, or general ledger. You build a team of a center of excellence kind of thing, or you can outsource it, where you start building more of the repetitive, non-judgmental transactions. We start seeing that how can we create a standardized, centralized, and automated process so that we get the productivity and leverage of scale. And third, and the most important part, which I strongly believe, is on the people. No statement is complete till I speak about people. It's how we are developing or leading talent or redefining the skill set of our existing colleagues, or whenever we get opportunity to hire from outside, how are we looking into those? So I was just having one discussion, just take 30 seconds more, with few of my marketing leaders yesterday on some leads analysis and opportunity analysis. And what I was most pleasant, the sales guys and the marketing guys, they have developed their own Power BI dashboards for their day-to-day use. And few of them even spoke about the word called R. I said, wow. So that's the kind of, you see that now this digital transformation is not only left with finance or IT or few specialist folks. Everybody realizes the importance of it, and they are actually themselves going out of the way, thanks to many online education platforms. They are able to learn and implement in their day-to-day work, so that they save time on analysis and they spend more time on influencing the stakeholders to take the right decision for the business.
Yeah, so just to carry forward from where Narayan said, we also look at our other functions other than the finance and the IT functions, looking into data much more closely. The automotive industry as such is a very competitive one, and we need to be one step ahead of the competition. So our marketing and sales team is working on various activities like how to get the purchase funnel in place, and how the data can be collated without the manual intervention or collecting the data. Otherwise, earlier what used to happen was that there would be a particular person who would be collating all the data from the dealership and then working it out. Today, we have put up a channel where the dealers can put in their data and then we can scrutinize. Plus, we do have our call centers which provide a lot of other data intelligence from the customers that they speak to. Other than that, we are seeing a lot of developments happening even at our dealership locations. We'll see a lot of digital inputs happening over there. Smaller dealership spaces are there now because you have a phygital sort of environment where you do not have to keep all the products in display. You have it on the walls, and the customer can come and go to the smallest detail of a car, which is part of our configurator that we have. So all of these things are changing the entire concept of doing business. And these are the disruptions that are going to lead us to better servicing the customer?
So, your thought on this, because you are, I think, in a space where you need to adapt almost like every day to changing environment and this kind of thing. So,
Yeah, actually, when I was listening to Puneet, I recall my old articles days. The nightmare was, trial balance when it was given manual trial balance. So today things have changed, and now the pendulum has swung other way. So now my organization is the data first organization. Finance department was the custodian of information for ages. Now data is everywhere. So you have to find the relevance and reinvent yourself what you are adding to the table. See, recording, everything was automated. Reporting, everyone has a BI tool, as Narayan just mentioned. Everyone has the access to the reporting and everything. What is left is analysis, insights. So that is where you have to put more and more insights. It has to be more timely. We can't wait for 30 days now to close and then report the things. People want things on flash, and that is where you have to reinvent. You have to bring your business acumen, first principle, and use the tools which are already there and everyone in the organization has the access to. So yeah, it is a challenging time, and I think finance has to reinvent. The flux which is happening to the whole function is actually to the different stream now. Yeah.
I think typically what happens is I think different parts of the organization are at different levels of digitization or automation, right? And I think that's a bridge we are now working very hard to sort of build through. But I think Narayan's right. I think people are at the center of this discussion. When I recruit someone across any function today, not just finance, I think the digital skills are very important. And we actually now have a training program specifically for digital skills, because Excel is passé, right? I think knowing 20 years back, knowing Excel probably meant something. Today, the size of data is such that you're not able to use Excel anymore. So you need to probably know SQL, you need to know a bit of R, bit of Python. I myself are not so digitally, literate about that, but at least we are telling them how to use this. That also brings to the other table as to one view of data, which again, I think is a challenge, right? I think, so we are constantly building our data platforms, our data lakes, which then democratizes data, which everybody has access to. Then people build their own little tools, what they want to, they drill down and do it. And thirdly, of course, real time. For something like as consumer activation, for example. If it's online today, I think I have a team that can constantly monitor and tell me what's working and what's not working. This is a big change from how it was earlier, where maybe it took 20 days or 30 days for a market research to sort of find out and come back and for you to correct it. So I think these are changes, and the talent today is more equipped towards it. And if we do not invest in the right tools, I don't think we're going to have a very happy organization at all. So I think the expectation from the employees today is that we have the top-notch tools, whether it's hardware, software, or connectivity, that enables them to do the task seamlessly.
As rightly said, you have, at one side you have your data. Obviously, there has to be a golden source of truth, as we call that, one view of data. Then on top of that, you have the analytics layer, where you are kind of massaging on engineering the data to come up with the insights. But one theme that I kind of see, common theme which is coming out, is that the people and skill, because ultimately they are the user of data or they are doing the analysis. So, and in today's world now, what's happening, the generic skill sets are there, but now we are getting more and more niche and specialist skill sets. So again, going back to with the analogy that I started with, the hockey analogy. So earlier you used to have the penalty corner specialists. Then you kind of, around 80s you started with that drag and flick. They become even more specialists than a specific penalty corner specialist. So those are kind of the hot skills, or the things that are kind of becoming very integral part of this whole change that we are seeing. So I'd like to see, given that, different industries and your views on, so what are some of the hot skills that you are looking at? While, the twofold question basically. One is on the hot skills. Secondly, how you are enabling people who are already in the organization to adapt to those skills. So be it learning program and other things. So.
Yeah. So before I answer, there are two things. One is I strongly believe finance is the only function in an organization which has got end-to-end view. So having the right talent at the right place is very critical for the success of the organization. And second, on a very critical thing is that in people, process and technology, I always believe that technology is the easiest, process is second most difficult, and third most difficult is people, because changing behavior is the most difficult aspect of any change management. So now coming to your question, so very clearly we as leaders, all of us and everyone in this room, who, the leaders, be it as a CFO or be it even as a line manager, if we hire the right talent and if we have the right org structure, then half job is done. And that's where, if you ask me honestly, I spend my maximum time in how can I create pillars of resilient and strong finance org structures, be it in business partnering, be it in EP, AR, GL, because we are B2B, so AR is also plays a very important role. So across domain taxation and everything. So how do we ensure that we provide right knowledge to the team or right training? First is the golden rule of 70-20-10. That holds very true. 70 is on job, 20 is then you get some mentor, and 10 is going online courses or offline courses. Second is what I have ensured and what I have inculcated, and thanks to my previous lives in Supply and Unilever and ONGC and PharmEasy, is that every 2 years, people will change. Everyone in my team changes their role. So I have been in Thermo Fisher over 2 years and 3 months, and you won't believe 60% of my teams, their roles either have been enhanced or have been changed. So I ensure that the biggest learning is on job. That is at 70%. And if you change roles and if you have a strong program of changing, it comes with a challenge, because there are many people who are not comfortable in changing their people's role, because at the end of the day, buck stops at them. But I believe that the more we are able to do, the more resilient organization will make, and the more colleagues and teams would be ready to stay back with the organization, because they are getting the whole width and depth of experience. So these are two critical things. So 70-20-10 rule, and every 2.5, 3 years ensuring that the colleague is doing different roles. So, and there is a very famous belief or bias that all of us finance guys have, that somebody who is in EP, AR or GL or taxation, he can't do a business partnering role. Let me tell you, 5 of my colleagues have moved out from AP, AR, GL and taxation to do business partnering role. So it's for business partnering, you don't need a skill. You need just one skill: right communication and influencing and seeing across the corners. That's all.
So, yeah, I look at the people front as the most area that we need to focus on, because the people tend to get into comfort zones if they are going to be there for a longer period. So you need a job shift on a continuous basis. Maybe 2 years might be a bit early. At least every 3 years there should be a change in their job content, because that's where they're going to learn new practices. Otherwise they'll be having stereotypes developed on the roles that they are doing. So in our organization, we have taken this upskilling as a very serious matter. So that there are training programs which are devised for each of the functions. Finance is definitely one of the functions that we need to be going on a regular basis, because of various changes in, like, taxation forms part of our finance function. So there are lots of changes which is continuously happening in there. So we need to ensure that the people are related to the topics that are there. Plus, if you look at the more data-driven functions like AP, AR, that's where actually the most mundane activity comes into being. So we need to actually motivate a lot on to these people so that they can get into more creative jobs. So wherein what we have created now is that how can the people improve the processes. So there's a target that has been given to every individual in the organization, in my department, that we need to find at least 100 hours of saving from the processes, so that the processes can be looked into more detail, take out the non-value added activities, look at where we can automate. So we are now finding some RPA and the BI tools to come into the accounts payable and accounts receivable roles, which are more transactional roles per se. And now he was mentioning about the trial balance. So at our times when we were doing our articleship, first thing that we had to do was to go and tally the trial. And that itself used to take a week, 10 days. So I come from a small town where I didn't work for KPMGs or PwCs of the world as articles. It was a small firm. We used to do right from accounting till the balance sheet audits, etc. So trial balance tallying was a job which was given to the first year article, the lowest job which was there. So now things have changed. Like it's all computerized. SAP is there. And SAP and likes have been helping a lot into the finance department. So we are continuously looking into those activities as well as to how SAP can be used. I remember a term with an ex-CFO of mine used to say, my ex-boss, that SAP is like a Ferrari. It's up to you whether you want to drive it in second gear or in the top gear. So, which is what most of the organizations would be driving it in the second gear, not in the top gear. So, because SAP has so much of functionalities that are actually not tapped. So, I think more of these things are happening today. We are concentrating a lot on the automation side. How much can we got from SAP so that the manual interventions can be reduced? So I think upskilling and continuous looking at the processes is what's going to drive the business now.
So in my current, so I have seen both worlds. In my previous avatar, I was working with a corporate and central corporate level. I have seen how digital transformation made people redundant. And we needed to invest in reskilling and all. We had a center of excellence in back office in Hyderabad. And we were doing global invoicing there. So once the RPAs and the bots were, implemented, all of a sudden 400 to 500 people become redundant. And then there was a massive initiative which was taken just to reskill, and a lot of people actually left, and there was a lot of strife, mental level. Human network you built over the time, you realize the pain and all. When I bring that lesson to this organization, one thing is, I'm lucky in a sense we are starting from the clean board. There's no legacy. So team, the people which I look for, and as you rightly mentioned, technology is, I think, easiest part. I think everyone now, especially the youngsters, they're very digital savvy and very quick to learn the skills. And they come with the tech. In fact, I will be the most, I should say, obsolete person I must be the person who would struggle to write codes and sequence. So what I believe today, especially when I look into an employee, how future ready he is. When I mean future ready, how critical thinker he is, how solution oriented he is. And one of the panelists mentioned, earlier, a sense of ownership. I think that is a very important aspect, that he should act like he owns the business. And fourth very important thing which for him is he should be ready to change. So, for example, one of my practices is whenever there's a format is set, in 3 months I'll change that. So that people don't get into the rut. I always say after 3 months if you're showing me the same report, something is wrong. Show me new. So this people, you should not get into habit. So this is 4 critical things which I think I always look for if I hire someone. Rest are things which can be taught. So we invest a lot in learning and development. We think around 2 to 2.5 hours is a KPI which is given to HR. That mandate should be invested. So yeah, that is the other stuff. But yes, these are the 4 things which I think is the most hot skill to answer your question, which I will look. Yeah.
I think in a way, some of this is to be, if you want to introduce a change, it has to be top-led. I think the leadership at the top has to change first. And I think that's sometimes the toughest. Simple. if we are now going to, if we have our BI dashboards, our set of data, then the propensity to ask for something different should probably go down, right? And then it has to trickle down to everybody that, okay, this is the data that we're going to use. And everybody in the organization is going to use that. Yes, maybe there are some ad hoc reports and other things. But if we were to say that, okay, this is how the company is going to work, and these are the principles, I think that has to be said, and that has to be said by the top management. If I keep asking my team a different report every day, then honestly, we're not done the job in terms of how the data integrations happen. There should be some place from where I should be able to draw down. So I think we also need to stop over-analyzing, to your point on ownership, and to trust people who have entrusted that responsibility to do it right. But more importantly, I think, like during this pandemic, I think the one division, one part of our organization that still sort of had to go back to office to do things, and two people in finance who were taking care of banking operations. Because the banks required that the documents be the physical documents be submitted. Okay? And some of it was something as basic as a transport documentation, the lorry receipt and, the proof of delivery. So we took upon us that we said, okay, this is one part that really is not digitized. I mean, digitization here does not mean just scanning a document and putting it on a cloud server. So we embarked on a journey where we said, okay, our entire transportation system, we're going to digitize. We're going to have a platform where every shipment today I can track where it is, and every proof of delivery, okay, is available at a click of a button. The person who could otherwise have to print probably 500 pages today has one click of a button, he gets 500 PDF files that he can attach and send to the bank. Of course, we have to commend the bank also for changing their ways through this system where today a lot of the digital documents are acceptable to them, which prior to that were a no-go area. But I think that's completely changed the way we look at it. And so suddenly things like revenue recognition, everything falls in one bucket. And like, this is one source of truth. Now, whether it's for us, whether it's for auditors, that's the platform you go. And now you probably audit that platform rather than the data itself. So I think this sort of changes, looking at some of the otherwise ignored parts of the business, which have linkages, I think that's again a very important thing for us to do. But yes, in the end, we have to invest in the right tools. They have to be easy. And without this, we will not be able to attract the digital talent that we hope to in the future.
Funny thing that, so much talk about trial balance suddenly transported me back to my business school days. So I was a fresh engineering graduate. I joined business school first year, first semester. They were giving accounting and math trial balance. I could never do it in my life. So maybe I wasn't upskilled enough to kind of carry that forward. But, coming back to the discussion, I think, what you mentioned. So the last kind of point that I wanted to have, like, late Peter Drucker said that the culture eats strategy for breakfast. So somewhere we need to see this whole, change that is happening. So there has to be the change in the entire organizational culture, which means that your KPIs, the employee, remuneration or the employee benefits, they have to be aligned with the kind of, work they're doing or the kind of skill set that we are expecting them to have. So one part is that, so what is the, some of these cultural changes that we are seeing? And secondly, in this, see, talent is a scarce resource. I mean, we are all struggling with that. And specifically people who are kind of, getting themselves upskilled with this kind of, niche skill set. So we are talking about future ready workforce and how we can secure them. So that second part is that, what should we do at organization to ensure that people who are getting upskilled through, let's say, our internal training programs, or as you said, that, moving around to different departments so that they can gain, more and more experience to retain those talents in the organization. So that would be my kind of final thoughts that I would like to hear from you. Yeah, please start.
So, no, I think to pick from where Narayan started, saying that rotation of people within the organization, within the function, is a very critical thing. So as a matter of, what we look at every process, every manager in the team is sort of expected that they look at the processes very carefully and to weed out whatever is manual, weed out whatever is repetitive, and to encourage them to automate these processes, RPA being one of them, accounts payable, how do you scan the whole invoice? So why do you need somebody to actually analyze and do this? I mean, it doesn't add any value to the person doing that process, okay? And let's even forget about the headcount that's required to do it. I think it doesn't add any value from their career progression. I think if we solve for that, if that's the mandate that, okay, let's look at people and how can we skill them within the organization and move them. And one big task of moving within the finance roles, or moving across the roles, is for the next person coming in to take it up very easily. You can't have like a 3-month transition or a 1-month transition. You should be able to imbibe the new role as if it was you done it a day before, right? So I think easing that role, which again means standardizing some of these processes, making it much simpler, and one view of data and one source of truth, right? I think that's the big challenge here.
So, if I have to answer it, building on what you were saying, is that more than what, it's the how of what. That is first most critical aspect of whenever we seek or look at a talent, because how is the cumulative experience since birth, that's what we perceive problems or challenges or react or respond in a manner. So how is something very important. Second would be very clearly is that digital or DABI or data analysis, business intelligence or digital part of it, it's now no more a choice. It's something which is imperative, which everybody has to embrace or perish. The third would be very clearly is that we have got a very strong modus operandi of, I mean, it's like I remember in 2021 when everybody was working from home, we have few of our Power BI or data scientist experts who do it very well. We used to conduct 2-hour session every month where everybody from finance or even extended team used to join online, and we used to pick up real life problems and we used to solve it, and we used to show how it changes the way they do. Fourth, very rightly mentioned, is that there are lots of things like Concur, Sephoria, or RPAs, or there are many other tools like innovate and all those stuff. I don't want to mention, but there are many tools which we keep on implementing in our day-to-day in the organization, not to solve for the bigger problems, even to solve day-to-day challenges like you mentioned. So we are now having a workflow solution where we don't want people to see PODs and everything. It captures from order to payment, collection. Every journey is captured in a workflow solution. So any auditor or any stakeholder, whoever wants to know at what stage of service that order is, not only at what region that, at what distance is it, and even what stage of that order is, we are creating a solution. So solving day-to-day lives, and hence trying to reduce the time which is required to do repetitive, non-judgmental work, and invest more time, save that time, improve work-life balance for team. That is first priority, because in finance everybody thinks that we are and people love to work 16, 18 hours a day. So my first job is to how can I bring it down to those normal 8, 10 hours a day. And then once we have done that, then the second step is how can we train them and educate them in doing more on the influencing part. Data is done, it's given. One single source of truth on a real-time basis is given. Now, how do you take action on that rather than preparing for that data is something which we keep on training our team. So it's a combination of online training, it's a combination of those classroom sessions, and it's a combination of job rotations, all of those stuff. So we continuously, because that's the only thing which will keep every colleague motivated to perform every day great execution, every day better than the previous day on the same mundane role.
If I may just add one piece, on the tools part that I spoke about, one tool, okay, and again, how skepticism has now changed. Legal guys are very difficult to, convince on any changes. So they always would insist on having a physical agreement, which meant that you're always tracking, acha ye isko bheja hai, wapas nahi aaye, so that sort of, and that sort of comes out in the audit saying that, oh, these many documents were not signed. getting them to adopt something like Adobe Sign or DocuSign or something. Today, that's the standard. I think everybody, every agreement that I have signed, at least in the last 1.5 years, is on one of these platforms. And it's become the acceptable norm. You have a digital copy, it's immediately there. And I mean, it's sort of to the workflow thing, right? I mean, you know where it's coming from. It's got a complete audit trail of who signed when. It's there. Now, again, legal enforceability, changes in law, how we're going to, have the stamp duty, all that's to be taken care of separately, no doubt about it. But from a workflow point of view, I think these changes are so critical. And in a way, I think COVID sort of pushed this very, very swiftly.
So today when I recruit someone, the first question that person asks me is, how digitally capable are we as an organization, as the function? So this is happening because everywhere you'll see a lot of digital footprint already having taken place. So it becomes actually a challenge many a time if you are not digitally sound in your organization to hire people. Because which means that if you're not digitally sound, you'll have to have more manual processes in there, which means that there would be a lot of hard work, more so of manual interventions to be done. So which is what the today's generation, like we've been highlighting all this while, is not really looking forward to. So digital transformation is going to happen, and it should happen. Otherwise, like my friend said, that it is take it or perish. So that is there. Plus, you talked about the compensation part, but today when I recruit people, or even when I talk to my current staff, the one thing that they want is flexibility. So flexibility in the office hours, flexibility of working from where and how. So we as a company have a policy that we are 30% work from office, 70% work from home. So that's a global policy that we have done. So I was mentioning to you during the lunch break that we have 3 C's in our organization. If any of these 3 C's meets the purpose, only then you should be coming to the office, which is create, collaborate, and celebrate. So for creation, our factories, we need to have the workers in place so that they would be there. And whenever we have to have the team meetings, that's the case when you should have your team meetings once in a while, so you bring the team back to the office. And then obviously whenever you achieve something, you need to celebrate. So this sort of a thing is definitely getting to the right chord with the employees. And obviously compensation is always a debatable topic, so I won't get too much into that.
Fair enough, yeah. So the final thoughts from your side, please.
Yeah, so I'll not take much time. Quickly, I will say, see again, for me, money is a hygiene part. And again, I have a little easier life because we are creating the culture. So culture is to find the problem solvers and empower them. And yes, of course, you have to compensate them well. If you are able to do that, you are able to retain it. And then there is a joke which I cannot resist, which I have read in LinkedIn. So one manager said, if I upskill a guy, he leaves. So his boss retorts, if you don't upskill him and he stays, then what? So that is
Thank you so much.
Well, ladies and gentlemen, today, the role of a modern CFO in terms of transparency, security, and budgeting is very critical. Another priority is to maintain governance and transparency along with alignment to sustainability and credibility.
So I think we've got a great group. I mean, just to quickly, everybody's been introduced. The whole purpose is to discuss governance and transparency. I think a lot of us have been reading in the newspaper about issues, scandals. I think CFOs are at the forefront of it. If you take, unfortunately, the perception in the market or even a regulator, the first person they come and meet when they come into an office when there's a scandal, it's the CFO, whether you like it or not. And there's no bad reason for it. It's because of the fact that you have all the data. They need the data, they will come and meet you. That's the first instance you come. And at the end of the day, a company which has good governance, you get the credit and you get the debit for it, as all of us as accountants would know. Just a show of hands, I just got to know today that a lot of CFOs who are not CAs. How many of you are chartered accountants here today? Just a show of hands. Okay, clearly overruns the non-CAs. But this is about a modern CFO, right? So that's one of the topics of discussion. So maybe in the interest of time, I'll start with Abhishek. So Abhishek, welcome. And obviously you're a CFO of a company which is evolving. It's evolved during the pandemic. How has the role of the CFO evolved along with the company in the last few years, as you started this company and how it's grown? So if you can share your thoughts.
No, thank you, Arpinder, and thank you for having me here. I'm the CFO of OYO and have been with OYO for a little over 7 years now. So have been through that journey of growing up and transformation. I think the role, and look, I'm just going to share my own experiences, no expert in how industry has shaped or anything, but from my personal experience, I think the role has clearly become the role of a business partner, a business enabler, and a conscious keeper, right? So to give you some examples, when I joined, one of the first things I wanted to do was to, let's keep a meeting for a margin review, right? And nobody would show up. Nobody would come to the meeting. So you had the responsibility of being a business partner where you would define dumb the finance down for people on the business to understand and percolate into the culture of the organization. So we had to coin, since we were in a disruptive industry, we had to coin our own terms, like we came up with a term called CURN, C-U-R-N, cost of a used room night, right? And we said that we're going to hold people accountable to CURN. So that's one part, right, which is the enabling business and becoming a strategic partner to your CEO. The second one today, more and more important, is the governance and whether it is board, whether it is compliance, because all of that is a given, right? You get no kudos for doing it right, but you'll get rogered if you don't do it right. So while more and more transaction processing can get automated, as was being discussed in the panel, the buck stops with you, right? And therefore, here also in this field, again, culture is very important, and setting up the right structures is very important, whether it is having an independent board, whether it is having the relevant committees, and especially you mentioned a comment regarding the startup ecosystem, right? They're starting to behave like a public company, even when you are a Series B, Series C company, and maybe few years away from being public is very, very important, because that's where you will learn, the company will learn that what is the expectation from a public market standpoint, and that should be the ultimate gold standard. Thank you.
No, thanks a lot, Abhishek. I think reporting is extremely important, especially what you give to the shareholders or potential shareholders. So I think very well said. I think I'd like to come to Prateek next. So Prateek, the question which I had for you was, has it become easier or difficult to maintain transparency, especially with these global upheavals? There's a lot of supply chain disruption, with the whole China, Ukraine, Russia situation. As a CFO, how do you walk the tightrope between non-compliance and assuring stakeholders? Because, a lot of people must be coming to you saying it's just a small issue, right? Or there's should we focus on the business or compliance? So over to you.
No, thanks very much. So thank you everyone for me being here. So I guess this is a very relevant question, Arpinder, that you asked as to how do you people view compliance first and foremost. The first thing is that whether it should be viewed as a burden, as just check in the box stuff, or is it really that helps a business grow and achieve scale. Our belief has always been that while initially everything looks like a burden, just because it's evolving, it's changing, you build a process and then there is something changes and then again you have to rebuild the process. But once it stabilizes, the benefits are really visible in the longer term. And once you see those benefits, it becomes easy to convince everyone around as to why is it that we need to follow that compliance and why is it that we need to, align to it. So I would say is that the tougher task is to convince everyone how compliance is not a burden, whether it is any operational compliance, any ESG related compliances or any other compliances. But once everyone realizes the benefit of being compliance oriented and how it helps in strengthening the processes, I think everyone gathers around so that there is no non-compliance. You're right. I mean, honestly, I've never faced a situation where there is a non-compliance and we're debating whether it should be disclosed or not. But there are many other aspects regarding the disclosure. And it's been like 7 years in India Mart when we were a private company. We also used to follow the similar standards. And now we are listed for last 3 years. For us, deciding whether something to disclose or not disclose, I would say is that anything falls in 3 different buckets. One is clearly this is material significant, we should disclose. Other is clearly this is immaterial, non-significant, we should not disclose. And then 80% of the things will fall in between, which are few people will think it's significant, few people will say it's non-significant. I am a believer of the policy that whenever you are in doubt, you should disclose rather than not disclosing it. So that's how we've been able to work on our disclosures, all our investor disclosures or everything, wherein we try and disclose most of these stuffs. Wherever anybody thinks that he needs it for whatever reason, we generally disclose and make it part of our investor communications.
I think thanks a lot for that, Prateek. I think it's good that, I think transparency is very critical because just my belief is there's so many whistleblowers. If you don't disclose it, somebody else will on your behalf. So better you be in the forefront of it.
Yeah, and also the other thing is also like, if you disclose it, probably I think becomes a lot more reassuring for the others rather than somebody else disclosing it. I mean, you take an example of like, let's say, I'm sure many of us are parents and there are kids. If kids does any mistake, if kids himself come and accept that I've done a mistake and I've learned from it, I'll correct it from now on, it's a lot more reassuring rather than somebody else saying, look, your kid did that and you're aware, you're not aware. Yeah. So I would say is that from that perspective, if there is anything, any goof up that has also happened, it's advisable to go and disclose and say that we learned from the mistake and then move on.
No, thank you, Prateek. And just moving on to Abhinav. So Abhinav, you're also kind of in a startup, though large startup, and you do a lot of work with consumers. You were just telling me how many blood tests you are planning to do across, and you offer to do mine free of cost. But the fact is that the ever-evolving regulatory landscape around startups, especially with the amount of consumers you have, you want to get, how do you rejig your integrity framework to deal with all of this? And last controversial question is, what I understand with startups is there are a lot of 25-year-olds who've just fresh out of college. Do they really understand compliance? Do they understand anything you're saying?
So let me take a step back here, and we have seen how business were run by various organizations pre-COVID and post-COVID. There's a significant change we have witnessed, like online business or adoption of digital payment. There's a significant shift happening across the board to digitization or to have everything online, or to store records or details in electronic form. And see, there's a very famous saying. Electric bulb is not an extension of improvement in candle or series of improvement in candle. So at times you need to revisit what you are doing and how you are doing. And see, innovation does not have any age. If you have any innovative idea, if you believe that is the need of the hour, that will sail through. And second thing here is today the way technology is being adopted by organization, government is also adopting technology. And the expectation from government is the compliance should go real time. That might be that we might be seeing this in near future, but we are witnessing those stuff in form of e-invoicing, e-way bills and all. So this is the what government is expecting from all organization. And so for compliance, we need to understand one basic thing. The cost of non-compliance is in multiples to the cost of compliance. So that doesn't have any bearing like what is your age or how old you are. You need to have this seriousness in your DNA. That's the most important thing. And what at Farm Easy, what we did is we built a robust audit committee and board, and they not only mentor us in terms of how to do the business, they also help us in to be up ahead of the curve in all the compliance matters. And one very good thing here is that these new age startups understand that, see, they don't take compliance as a burden, they take this as an opportunity. So if you are a well compliant company, you will be preferred by investors, you will be preferred by government, you will be preferred by suppliers, and you will be preferred by employees as well. So in a nutshell, so being CFO or being leader, finance leader, you should always go to the board, ask for significant budget or good amount of budget to be spent on automating the compliances. Reason being कि these days, this is the age where future belong to those who move fast in adopting technological landscape or changing business dynamics. If you believe कि you'll do once everybody did it, then you might be late and you might miss the boat. You should be firm enough. You should go and ask board and for budget to be spent on automating the compliances, because now in today's time you cannot do compliance manually. And second thing here is, if you want to stay ahead of the curve, you need to move fast how government is moving. Today government have changed things so significantly in terms of compliances. Most of the things are digital. So if you have to ahead of the curve, and you need to move fast than the government. Today it's not post facto thing. You have to be real time compliant on various things, and things are moving in that direction.
Can I add to your comment on 25-year-old, because OYO's average median age will be, of the employees will be about 25, right? And I spent 10 years in GE, was earlier part of GE's corporate audit staff. There the DNA was injected from day one, integrity, spirit, letter, everything. We realized that nobody's going to listen here, right? So we said that, okay, how do we communicate this in a language that people will understand? So we said, okay, let's gamify this entire thing. So we prepared our code of conduct, right? And we prepared simple tests around it. For example, your brother-in-law owns a hotel, and that hotel is now signed, is going to be signed up with OYO. A, I have no responsibility, I am doing my job. B, I have to disclose because there could be a potential conflict of interest, right? Second, there's a government tender happening, right? There's an agent who's involved, and he's saying that if you give me X%, I will assure you a tender. And the guy is saying, net off the commission, we will still make a lot of money. What is your responsibility? So we actually created case studies and content which was mobile friendly, which people could, young employees, sales managers, business development managers could train themselves on, and then get certified internally, get tested. And then, if people won't still take the test, we shut off their emails. We actually shut off their emails, and it is an annual testing. If you don't do it, you will not be able to work. Yeah. So you got to enable, if you want to achieve an objective, like any other business problem you solve, the problem of governance has also to be, needs to be solved in a manner where it will get done, rather than coming from a very, very high ivory tower and, preaching sort of a manner. So I thought I'll add just.
No, I think that's very well said, because we've seen companies which have moved away from very legal type of compliance trainings, to gamified versions like you. So I think what Abhishek said, all of you should consider that, because that's really the cool thing which makes it interesting for people and all people. And coming back to Abhinav, I picked up one point from what you said is about the fact that technology is a must. I think that maybe if you want to add some more details around it, I think it's a very important topic.
So in our case, we are using, we are tech first company, we are using RPAs, we are using artificial intelligence, not only in compliance or monitoring consumer experience, but in all the functions of the company, be it HR, be it finance, be it IT, or wherever it is. Because we believe that there is a lot of insight that can be that will come out of this data, and that will help you to move fast. So that's the need of the hour. This is what I believe.
No, thanks for that. Coming to you, Parag, I think you're different from all of them. Like you're still the old world industry. So you're sitting here quietly. So talk about your governance goals around ESG. It's the hottest, coolest topic. I know EY, we're hiring like thousands of people globally. We think ESG, everyone's going to become ESG compliant, balance sheets, financials. So your views on that.
So thanks Harvinder. And I think ESG has gained a lot of momentum in the last few years, given the fact that investors' mandates are now aligned to ESG. So for any investment decisions for any fund managers, what used to be going to an investment committee or a risk committee, now it also goes to an ESG committee. This is driving and channelizing all investments into businesses where they are ESG compliant. And of course, going back to it, we are signatories to the COP and COP 26 and then later 30, and we've signed up our targets, and all of that is therefore to channelize in terms of climate change and lower carbon emissions. For us as Adani Group, we've taken a lot of steps in ensuring strengthening ESG's framework. We have actually constituted a committee below the board, what we call it as the Corporate Responsibility Committee. This committee is purely for ESG. So it is a committee which consists of more than 50% of independent directors. And the idea is to give direction, impetus to all the ESG initiatives. For example, from a governance standpoint of view, whilst we all have as listed entities, audit committees, NRCs, risk committees, we have most of these committees being 100% independent. Further, we have sub-risk committees, be it in terms of tax, regulatory, legal risks, be it in terms of M&As. As a B2C company, we have a public consumer committee where the committee, sits in the shoes of the consumers to address what possible grievances could be and therefore how we should address them. All of this is to strengthen in a manner the governance of the organization, and therefore, that solves G of the ESG part. Similarly, as far as environmental perspectives are concerned, and as we move in terms of energy transition, lower carbon emission, lots of things are being done. For example, today, when it comes to the end consumers, every consumer gets a gas utility bill or electricity utility bill. These gas utility bill from Adani Gas are digitally being signed and WhatsApped on every consumer. So there is no paper process that is, being done at all. Today, almost 96% of our collections are all digital. And whilst, on one hand, it is improving the digitalization curve, but more so it's also, helping in the environmental initiative of saving paper. So almost close to 2.5 million sheets of paper which are being printed on an annual basis for us are actually being saved in terms of trees. Similarly, the entire of our CNG stations, entire our sites, entire our offices, all are solarized. So again, that's an initiative in terms of moving into lower carbon emission. We've started a new novel concept of what we call as greenmosphere, picked up from the word atmosphere. And this greenmosphere initiative is doing three things. A, it is actually doing energy audits, which is going to every consumer, even industrial consumers, to help them save energy. B, it actually is creating awareness about the benefits of a cleaner environment by going into schools. We've gone to almost 50 plus schools by now, in educating the younger generation of what environmental is and what initiatives one should take out there. Similarly, besides this, there are, green plantation being done, and some of them, more in terms of the Japanese origin, the Miyawaki plantation, which allows, lesser carbon retention. So these initiatives are being taken, and even the consumers, the stakeholders, contractors, vendors, all are encouraged to participate, to contribute to what we call as the ESG corpus out here. So this is the Greenosphere initiative that we've taken on strengthening the environmental part of it. On the social part of it, similarly, when we are looking at R&R, when we are looking at, building in terms of locations, plans on a pan-India basis, the people who are there, providing them employment, providing, support of schooling to the children of, of those people who are working. Those sorts of initiatives are being done in terms of strengthening S. And that's how we are comprehensively doing an ESG framework, well governed under a board committee to ensure that, each one is being strengthened. In fact, similarly, even when it comes to our contractors are getting ranked based on, their performance, but along with the performance on how they are taking some of these initiatives. So it's a very well laid out plan on what we are working. And I think ESG is a precondition now. So to that extent, it is an enabler to ensure that corporates and all are driving towards, a better society.
Thanks a lot. Thanks a lot, Parag. I think that's for all of us who are worried about climate change, I think it's great to hear. Coming to you, Prateek, a bit, I think CFOs have a lot of pressure on their heads, but I'd like to add one more to your head, saying diversity and inclusion goals. So at least my perception is diversity and inclusion is become also a reporting and a reality. So any thoughts on that and what role a CFO plays in that?
Sure. I think CFO is one that anything comes to money, CFO becomes important. So thinking about the newer roles and including diversity would require very different budgets, different approach. So that comes in play. But more importantly, the way I see it is, the CFO also becomes important from a driving mindset change perspective. And when we look at this, at IndiaMart, we debated this, that what does diversity means when we talk about diversity. Typically, people consider that this is only a gender diversity. But the way we see it is that, it can be interpreted in many ways. And the real benefit comes in if we look at it much more holistically. So while gender is one aspect of looking at diversity, but the other aspect is also, as you rightly said in one of the questions, how do you make 25-year-old works with 45-year-old? That's a very different diversity, different experience, different thought process. How do you ensure that a person from North India mingles with person with South India? So it's a regional or geographical diversity that comes into play. So looking at holistically and then having a team which has right ingredient of all the different backgrounds is when we believe that we would likely to see the real benefits of having a diverse team. And in IndiaMart, we do have very good participations of women, very good participations of younger employees. The average age is roughly around 28 odd years for our organization. So from that perspective, once everyone accepts it, then it becomes easy to drive it. The challenge becomes that quantifying the benefit of having a diverse team, it becomes slightly difficult to do so as to, how do you quantify that particular benefit? While everyone realizes that having a different perspective in a room always helps in taking much better decisions so that, all the perspectives are covered. There are no black spots when you're taking a decision, but quantifying as to whether it would lead to X percentage more revenue or Y percentage lesser cost, it becomes slightly difficult to do so. So I would say it's, in a matter of fact, would be slightly leap of faith at the moment. And probably I think as we continue to build on diverse teams, we would start seeing the benefits coming in a much larger way. The second aspect is that once everyone appreciates the need and understands the importance of having diversity, second is that what should be our realistic targets. Because on one hand, we can say, look, that we would like to achieve X percentage, Y percentage, but we have to be cognizant of the fact that it's not only us, it's the entire ecosystem. So the talent needs to be available in that thing if you would like to do that. So keeping those realistic checks in mind, what should be the targets and how do we get right resources and the capital allocation to achieve that? So that's what I would say is that the role of CFO would be in this.
If I may add to Pratik, and Pratik very well articulated, but I think diversity is a very large sort of definition. So in terms of robust decision making, which is creating task forces on assignments where you have different sets of skills, different sets of people. We have a sponsor partner in Total, who has almost close to 170 professions or skills which are being aligned and mapped. And that's again to bring in diversity. Diversity is also in terms of language. For example, when it comes to our own consumers who's sitting, say, in Ahmedabad, gets to speak in Gujarati, and for that matter, somebody who's in South speaks the local language. So that's also diversity. Finally, whilst, there is gender diversity, etc., also the specially abled people. So there is also an initiative, where we are looking at building in specially abled people who can support in certain areas, certain functions, and bring their own different perspective.
No, I think very well put, both Pratik and Parag. I think diversity is very, very critical today. I think as ESG is, and at least I can tell you in EY also, we so much focus on it, about empowering people, etc. Coming to you, Abhishek, I think you have operations in India, as I understood earlier. You offered me a good rate on a hotel property in Europe. So anybody who's interested in good rates, please get in touch with Abhishek after this. He's getting fantastic rates in Austria and other countries. But you have a role of being a CFO in India and Europe. So I want to hear a little bit about you. How do you manage that? Is your role in India a little different than your role in Europe, or you keep a standard which is consistent in the two regions? That's my first question. Second is, how do you manage KPIs? Because I always find KPIs sometimes leads to governance issues. You're moving towards the target irrespective how you reach that target. So thoughts on that?
Yeah. And we are one of the largest vacation home companies in Europe. So the rate offered to Arpinder is also open to the CFO community. I've always had the group responsibility. My colleague Deepak is the CFO of our Europe business as well, and he's based in Zurich. While the core responsibilities of business partnership, controllership, governance remain the same, I think there's definitely cultural nuances of how to engage with people of different geographies. There's definitely different legal requirements. Europe is a tough legal market to work in. For example, the audit standards in Netherlands are especially tough. So it needs more planning. It needs more resource allocation. They need to be given a more heads up about the timelines and more engagement. So yeah, I think ultimately, it is about getting the right experts because one can only do that much and have the right team in place and be ready to roll your sleeves and get your hands dirty and learn about it. So it's been an interesting experience for sure. On your second question regarding KPIs, look, I think my view is that the compliance and integrity are the ticket to the table, right? Without that, entry is not permitted in the hall. After that, what you can or cannot do in the hall is up to your performance. But without that, you're not allowed to enter. So we have a zero tolerance policy. And then, you have to make an example when you do enter into situations where one has to deal with integrity matters. And we as a company have always had a zero tolerance policy on those matters. And I think that flows across the organization because people see that what is allowed and what is acceptable and what is not acceptable. So I think it is the say-do ratio of the leadership. It is tone from the top that matters more than any written policy document.
No, thanks a lot. I think very well said. I think a lot of these jurisdictions, to answer your first question, I think are very complicated. And you have to really understand all of that sitting out of India. And I think your second point is absolutely valid. I think there's no compromise to zero tolerance. Because either zero tolerance or it's not zero tolerance.
Yeah.
I think when people say it's middling zero, 0.5, I think that doesn't work, just if people are worried about that. Now coming to Abhinav, you were telling me earlier that, there's a big acquisition you all did at Pharmeasy, which was Thyrocare. We all read about it. Obviously, Thyrocare was a listed entity. You acquired it. What is the role of a CFO today on a business table? I used to be a CFO in my old life. And I remember getting a seat on the table where they actually hear your point of view on business. How do you get there? Rather than just, here's my balance sheet, share some numbers, and you're like the side guy having coffee.
See, today the role of CFO is they are enabler, then to controller. They enable the business because, see, at the end of the day, whatever organization is doing has to result into PAT, or that has to bring some social awareness or social change. That's the agenda. So whatever organization is doing should lead to profitability or should lead to legacy for the organization. That might not be immediately, that might be in near future, but that should create a legacy for the entire enterprise. And CFO being the topmost officer of finance in the company, they understand how money is flowing, and they have to ensure sustainability of the organization. And see, one thing they are doing is they ensure good governance. It is there in the organization. They shift gears from good to great in terms of governance, because for business guys, governance might not be a agenda for them to drive, but for CFO, they drive governance to ensure, because it's a litmus test of sustainability. They push governance in terms of policies across the board. They keep on monitoring the policy. They keep on updating board, and they keep on updating board how things are evolving in the organization. And the second important thing here is your board should be competent enough to absorb all these changes. It should not be kind of chai, coffee, board kind of a thing. And see, in our case, like we have appointed Aditya Puri as a chairman, and he, like audit committee chairman is Subramaniam Subbu. Both of them are guiding us on our day-to-day how to do things, because they carry enormous experience with them, and this help us in understanding or visualizing the problem before it becomes a problem. So this is how we are looking at these things.
No, thanks a lot, Abhinav. I think getting mentors is also very critical. And I think that's something we all underrate, but I think more and more companies I see are doing that. And I think it's great to have mentors in that sense. Parag, coming to you. So you told me earlier you're not a chartered accountant and you're better than the CAs when it comes to being a CFO. So maybe you can shed some light for the room which has got 99% CAs. But on a serious note, the modern CFO is changing, right? He's more a business partner, as Abhishek said and everybody else said. So a little how your role has transformed, how do you cater to it? So just a little bit about the modern CFO as I put it.
So Arvinder, let me take you through the journey on how CFO's role has evolved over a period of time. And CFO a few decades back was more an inward role. I would say there was very little differentiation between what we now call as a financial controller and what possibly we were calling a CFO a few decades back. So that I think, is where the entire process started of what we call as a CFO's role. Very inward, about processes, policies, making sure your balance sheets, everything is intact, audit, etc. Then it came in the early, 2008 onwards, where, all the corporates were, especially the listed entities, were in the eyes of the investors. A lot of areas, questions around governance, on how, investors wanted to hear not just the CEO of a business, but also the CFO on his take on the business. And that really started the journey of what I would call as an outward role. And that's when, the CFO became actually as much as a face of the entity, which was not the case. So from a very inward role, it went to a very outward role. And I think the last 2-3 years in the kind of volatility, the pandemic that we've gone through, it has added different dimensions to that role. It is a fulcrum between the business and finance. Digitalization is one of the other larger tasks, directly or indirectly, that is being seen by the CFO. And that's what has really, made it, a position which gives insight and has an ability to forecast analytics on data and therefore to see what could go wrong. And certainly CFO as the gatekeeper, has to mitigate any potential risks. So that's how the role has changed, where there is a lot more about business rather than just about, the core traditional role that was there a few decades back of CFO.
Okay. So one question to Parag, you and Abhishek. Should a CFO really aspire to become a CEO now? Enough for being a gatekeeper, कितना time हम gate पे बैठे रहेंगे?
I think, if, like I said, CFO or a CEO, I think each one is a celebrated role now because of the importance of each area. It is, of course, individual aspiration. And yes, CFOs, we've seen more so in the recent times, moving into business and CEO roles. So I think, all those possibilities are now clearly available for a CFO. I think it's really on the CFO and his desire of what he wants to aspire. But I think from a perspective of, charting into a CEO or own journey, I think it is certainly more than ever being welcomed.
Abhishek, thoughts on that?
I'll answer this question with the actual anecdote from one of my bosses at GE who became a business head. He told me that when you're a CFO, you're an officer, right? That people come to you for budgets, you sign things, so you have an office, you're an officer. The moment you become a business head or a CEO, you become a sales guy. There you have to go to clients, sit outside and wait for them, right? So, and then, they can refuse the meeting even after making you wait for, 1 hour, 2 hour, whatever, right? So, that journey is 100% possible, but it is a very personal decision, right? It is a decision on what you enjoy the most. And in a sense, what Parag was outlining, the CFO role today is also a sales guy's role, right? You are the salesman of the company's performance to the investors. You are a salesman of the company's governance and compliance culture to the board and the independent, to the shareholders and everyone. And you're a salesperson for the talent that you want to attract, right? So it depends on what kind of sales one wants to do. And it is a personal choice. There is no capability limitation anywhere.
Okay. No, thanks for that, Abhishek. I'd like to ask a question from both Abhinav and Prateek. One of the things I find is, this whole governance system of zero tolerance, as Abhishek said it. Zero tolerance is said easily, but practicing it is not easy. At least what I have seen in practice is sacking a star performer is always difficult. Like you said, the sales guy who sits outside. If a person is really good at sitting outside and getting you the big deals as a rainmaker, sacking him is not easy. So question is, do you actually, both of you, and I'll take each one at a time, do you actually believe that we do have zero tolerance in India? Because my impression is that no one gets sacked. Everyone is asked to resign, as a first example. So your thoughts first on that, because are we really practicing it?
Yeah, I would say is that the practice is there, zero tolerance, certainly. The question is, when you say zero tolerance, I mean, there are a few things which you would say zero tolerance. There are a few things which you say, okay, somewhat of things you're still okay with, as long as those are not repeated again. So there are warning systems that you do. I would say that it is important to see is that you don't reach at that stage. And, how do you act beforehand and have enough systems in place, counseling in place, guidance in place, value systems in place, so that you don't end up taking or dealing with an instance wherein something like this has happened. Being more proactive, understanding of people's aspirations as to what they will do and what they will not do, understanding systems that there are no undue pressures on them, or there is no undue incentivization to the people, which directs somebody to behave in a certain way you would not like it to do. To my mind, I think those are more important aspects to see. Once something has happened, then of course a person takes a decision. Anyway, I've seen people, the decisions being taken wherein something has happened, but we always go back and see that is it actually, or was it a mistake of that person concerned, or was there something in the systems and the incentivization which would have led that person to behave in a way you would not have wanted it to be. So figuring that thing out and removing that from the system is more important from my standpoint.
No, I agree. I think fixing the system is most important.
There are 2 points here. One is that to follow zero tolerance is kind of little difficult, because as a person we always have emotional angle in whatever we do. But at times it becomes necessary, reason being you have to set examples for others. So that's, we need to understand. And see, we always build a legacy for generations to come. So there certain things are kind of must, and certain things are kind of necessary. We need to draw a line for everything. So at times things become very important, and you can't take any leeway there. So there has to be a zero tolerance. Reason being is just that examples for others, and people will have certain fear in their mind if they are doing anything wrong. And there's of course a human angle to it, but I believe there has to be a zero tolerance thing in any policy or in whatever you do.
No, thanks for that. I think that's very important. I also believe that actually. So Abhishek, any closing comments?
No, look, I think this is a great time to be a finance leader of a company. Not only you get to see the holistic view, you get to interact, learn about the business. You're involved in the fundraising activities, the controllership governance board. So I would, and I think all of the discussions today have been very helpful to me as well. Thank you.
No, thanks a lot, Abhishek, and thanks for, you informed me before I got my letter. And this is not my termination letter, just for the record. But I mean, last few comments as we wrap up.
I think things are changing today. Matlab, finance is a critical role. It's not like controlling these days, it's like enabling business. We have to ensure there is good governance, because this will help organization to grow far, to go far, and have adoption of technology so that we can go fast wherever we want to go. That's the main thing.
Okay, thank you. Prateek, last comments from your end.
I would say it's an exciting role. I mean, I'm quite excited. But more importantly, yeah, challenging role, because the things are evolving. And the thing which helps and has helped me is, how can you be more proactive? Because making any change, there are 2 things. One is a deadline and second is change. If you segregate the two, being proactive, you change first and the deadline comes later. It becomes much more easy to go for that change. So I would say is that being proactive always helps, and it's fairly exciting to do.
I think it is exciting times for any finance leader, and certainly the way I see things, compliance, controls, fundraising, multifarious roles, and very much so linked with business. But I think importantly, the CFO has the ability to impact, and an impact which can be there for long in an organization, and it can actually shape the journey of an organization. So I think that's very, very important. Thank you.
No, thank you. Thank you to the panel. Sorry, we have less time, as I've just been informed. But the fact is that I think great comments. Hopefully you took some of them. You can meet some of them after the session is over to ask them some questions. In just closing, I'll just add 2 points to it, is that, compliance is like brakes. The best cars in the world are the ones which have the best brakes. And the best cars in the world nowadays, we know which are the best seat belts. So the fact is that it's very important to have brakes and seat belts, and your car can go as fast as you want. So I consider compliance very similar to that. And I also believe in zero tolerance, which was mentioned. And lastly, technology. I think which you mentioned, I think strongly believe in that. So hopefully you enjoyed it. I wish we had more time, but thank you so much.
Thank you.
Thank you. Thank you so much.
As we all know that CFOs are keeping a close watch on the inflation numbers rise month after month, strategies behind maintaining the business momentum is becoming crucial. How are the CFOs ensuring business continuity and keeping up with the innovation quotient amid the inflation scare?
The topic for today is surviving inflation and how CFOs are fighting the risk. However, when as a panel we were discussing what are the implications of multiple macroeconomic scenarios and not just inflation on their businesses, so we thought we'll try and keep it a little bit more wider than just inflation when we do a discussion on the respective industries. I think, but before we get into that, I wanted to read out a few statistics of what's really happening in the economy and some macroeconomic factors. And pardon me if I don't get some of these right, even though I have got these validated by my economic advisory team. So here goes. The first one, consumer price inflation in India is almost at 7% in August, which is above the level RBI would want it to be. And therefore, RBI has been increasing the interest rates to bring down the inflation. But this is resulting in tightening of liquidity in the economy. So that's one. The other one is around inflation also, but this is more to do with the US inflation, where US is also facing high inflation, and the US Fed has been increasing interest rates regularly, including a 75 basis point hike yesterday. This may lead to the FII money going back to the US and put more pressure on the already depreciated exchange rates. The third one is around trade deficit. So India's trade deficit in August 2022 was about $28 billion, which was more than double from the $11 billion it was in August 2021. Again, this will put pressure on exchange rates and also fiscal deficit. Also, India's forex reserves have fallen to $550 billion in July from $641 billion in October 2021. In addition, there are other macroeconomic scenarios like high unemployment rate, which is now at 8.3%, up from about 6.8% in July. The rural consumption seems to be low. The Ukraine war we are all aware about, the supply chain disruptions, etc. But that said, I think it's not all doom and gloom. The GDP growth has been heartening, even though the base impact is there. The non-food credit is expanding at a healthy rate of 15%. A normal monsoon, which we have seen this year, and government's focus on increasing the infra spending, which may lead to boost of demand at a rural level. So those were just some of the macroeconomic factors, and some of these we'll explore more when we speak with our esteemed panelists. I think what we'll do is we will go around the table with our panelists, which represent a cross-section of the industries, starting from Amit, who represents FMCG and healthcare, to Amrit, who represents financial services and Max Life, to Kapil, who represents power sector, and to Sebal, who represents consumer durables. So maybe without further ado, I'll start with the first set of questions, and maybe Amit, I'll start with you. What has been the impact of these macroeconomic trends and more on your industry and your organization?
Yeah, see, actually, if we have to look at the impact of the macroeconomic trends over the industry, it's very difficult scenario to paint a picture with a single stroke of the brush. When you look at the overall, trends that are evolving, you'll see that, the COVID is going downwards. There are, consumer demands in some of the sectors is coming back. There are some areas where you're seeing the change in the consumer habits overall. So it's a very, very, interesting and complicated scenario. I think the answer to the question for the organization lies when you peel the onion further and try to understand beyond the broader industry trend, what's happening to the categories that you're playing in. Because, within the healthcare and the FMCG space, there are very different trends within the categories. So, if you take, let's say, the personal care and the health and hygiene category, the trends in that category are completely different versus, let's say, the personal grooming category. And same thing holds good, for some of the other categories within the FMCG space. So overall, we are not seeing a complete die down of the sentiment with respect to underlying consumer demand, but what we are seeing is there is an evolution of the consumer in different spaces. And if you further peel the onion down with respect to the price points at which the consumers were before, they were during the COVID, and now post the inflation coming in, you will again see a very different trend. So I think the organizations who are operating in any industry have to peel the onion further to understand what is happening in the segments or the categories that they are playing in, and how they can encash on that. To summarize, we are not seeing a complete slacking of the demand in the FMCG or the healthcare space for that matter, but there are watch-outs, with respect to certain segments which could be, let's say, in more of the beauty space or the personal, the cosmetic space in those categories. But when you look at the personal hygiene or you look at the healthcare, there is a strong momentum which got picked up post-COVID, which to a certain extent is sustaining. For a higher base is making it a bit difficult to really evaluate whether there is an equivalent amount of growth. But if you take the base to be pre-COVID to what we are seeing today, there is a substantial amount of growth that has already happened in this space within the FMCG. But yeah, the personal grooming spaces and some of these spaces are where the challenge would still lie, because the inflation is not going to help this particular sector, and it's not something which consumers relate immediately.
Very interesting. Thanks, Amit. Sebal, moving on to you, maybe from FMCG healthcare to consumer durables, again a B2C segment. How are you seeing some of these factors play up in your industry?
Yeah, Gaurav, as you mentioned, inflation has been at its peak for almost like 4 decades in the US, Europe, and many parts of the globe, and also in India. It has been quite striking. I agree with what Amit elucidated right now. So basically, consumer behavior is changing. As a result of that, there are very selective areas where it is inflation agnostic. People are choosing for demand. There are certain areas where it is not. Probably we can name it as discretionary, where the growth is a little bit stagnant, or maybe it is slightly slow at this point of time, which is could be a direct response to inflation. That is what we are seeing. If I refer to my industry, in particular consumer durables, ever since the inflation struck right from almost like May end onwards, we are seeing this direct impact in the demand slowdown which is happening. There are varied kind of consumption patterns that are emerging. There are certain pockets where the premium sector are growing, but durables, fast-moving consumer goods, fast-moving electrical goods, as we call our space, there, since it is masses, it touches the masses, inflation, first and foremost, worst hits the masses. It is at the down the line, the bottom of the pyramid of the population that it really, really hits. That is where the volume tends to slightly slow down, taper off. Having said that, we are very hopeful that this is a very short-term phenomenon, because end of the day, India is a consumption story. That consumption has to strike back, it has to come back. Honestly speaking, gradually the borderline of discretion versus staples is probably thinning out a little bit. So, to some, even a Mercedes probably is becoming a necessity, whereas maybe some other things are not. But having said that, on the serious note, basically that is the trend that is emerging, at least we are seeing in the last 4 or 5 months, very, very distinctively. We are all hoping to see the festival, and this is something which in a country like India, monsoons, festivals, these are things which really cause a trigger for the demand to pick up. We are all hoping and expecting for that. But in the longer run, India will continue to remain a consumption story. So this will get addressed. But yes, there could be some flowback of the indicative recession which is being predicted in some of the global markets. There could be an induction of that coming into the country as well. So supply chain is getting affected. Demand is definitely in sporadic way, it is getting affected. Costs are spiraling. So it's a little bit of a varied situation which is coming up.
Thanks, Abel. So moving on, I think to another B2C segment, but in the services industry now. Amrit, what are you seeing in the life insurance space? How is the economic factors playing up, or anything different which you are seeing in your organization and your industry?
Yeah, firstly, I think Saibul's point, India is a under-penetrated story all across. So these are times and horizons which comes. And on the lighter side, I was making a comment earlier to Gaurav that this inflation topic, maybe the CFOs of US companies would be, worried about it and kind of trying to navigate it. But CFOs of India, they have seen high inflation environments. They have lived in high inflation environments. They know how to navigate it. So it's part and parcel of our lives. But coming specifically to us, and I'll just step back rather than speak about last few months. I mean, I'm going to take this opportunity to talk about how last 2.5 years have been actually. Very, very tough years for everyone all across. And it was even the case even for life insurance industry. We do these risk scenarios where we give shocks to business and, try to assess that 1 in 100 kind of a phenomena happening. We saw some of those happening to us. We saw very high mortality, many people, many loved ones losing their lives. We saw a very high amount of claims inflow across the industry. We saw volatility in the equity and the debt markets, which were unseen of in the times, at least in the recent times. And it kind of tested the entire industry. But I think the industry, the life insurance industry especially, came out quite resilient and very strong. And it honored claims all across. And Max Life was also one of the players which actually in this particular year had the highest claims paid ratio. So we demonstrated at 99.35%, we ensured that, all claims get kind of paid out. So a lot of resilience got shown. And coming now, very recent phenomena around the macroeconomic trends, etc., we haven't really seen it come through yet. In fact, because our numbers are published on a monthly basis to the industry, so if some of you are following, the new premiums have grown by 25% in the private side. And if you add LIC into it, then they have grown 23%. Now, I know my fellow CFOs will say base effect, but I do a 3-year CAGR, that also a healthy 12-13%. So strong momentum actually so far in the industry, and it's secular. It's, there are 24, 25 players in the industry, all of them are growing. So it's strong outcomes actually so far. But yeah, I think inflation does have its elements. It can definitely eat into savings pool, but inflation and then associated interest rise also creates good proposition for insurance companies to offer. We can offer better interest rates actually to the consumers. And it depends, as Saibal was saying, which segment you're operating in. If you're on a lower income group, the inflation can eat into savings more sharply. But if you are operating in a higher income groups, etc., the impacts are slightly moderated. But on the cost side, we are a people's business. We are seeing inflation, attrition, whatever you want to call it. Actually, those trends impacting those costs quite strongly.
Thanks, Amrit. So it's interesting. I think what we've heard so far, there is from the FMCG side, it's more category-based impact. From a consumer durable side, I think the lower end, there's impact. And I think when I speak with Amrit, what he's saying is that the insurance premiums are growing. So maybe there is a liquidity crunch, so there's not a liquidity crunch, or if it is, or maybe it is at a particular level of the strata of the society, and there's a society which is investing significantly in insurance and savings. So that's an interesting trend which we are hearing from the panelists here. Kapil, coming to you, I think from a B2C to a B2B side, from a power utility standpoint, what are you seeing in your industry? How are these trends shaping up?
So thanks, Gaurav. As you mentioned, inflation is certainly a point of concern for power sector, because inflation in power sector is something which impacts all the industry. Because if the power is costly, so the cost of production of entire sector goes up. And we had witnessed inflation and we have curtailed it also. There have been support from the government and from all different fronts, wherein if you see around 6 months back, the IEX power prices were around 16 rupees. So 16 rupees per unit at the peak load demand, which has come down now to 4 rupees, 5 rupees through the power trading exchange and all. So it's because of the various steps taken by the government, by all the power producers and all, because there were various factors to it. So what basically the companies we are seeing, or the government is also helping to see how to reduce the cost of production, or how to supply the low cost of power to the discoms or to the consumers. So there were various steps to it, like Coal India increasing the production, or we are taking imported coal and all. So these are various steps which we have taken, and all the companies are taking since last 5-6 months to control inflation so that it doesn't percolates down to each and every individual. Because inflation in the power sector will impact to all the industries and all the, whether it's service sector or a manufacturing sector. So we have been very wary of this, and that is something which is a great point of concern for all of us. And as finance professional, we are more even concerned because cost is something which is you have to control. Because since it's a highly capital intensive industry, so we say it that every rupee saved is 20 rupees earned. So we basically more emphasize towards saving so that bring down the cost and improve the bottom line.
Okay, very interesting. Thank you, Kapil. This is probably a question to all of you, whoever wants to pick it up. Any kind of impact which you are seeing from a rupee-dollar depreciation perspective or supply chain because of China factors or any other global factors like the Ukraine war, etc., on your businesses, any impact? I know some of you have probably more domestic businesses, so it may not be directly impacted, but...
No, in power sector, definitely the rupee-dollar exchange rate has impacted because we have been importing coal, or most of the power producers have been importing coal, which increases the cost of the production. So basically, in order to overcome that, there are various steps which are taken by the finance or the CEOs of the business. Like as a finance person, you do the hedging at the appropriate time so that it doesn't add to your cost at a later point of time. Secondly, you do the mix of the various GCVs or varieties of the coal so that you are not totally impacted by the exchange rate and the cost doesn't goes up. So if there are certain problems, then there are certain solutions to it also.
Okay, I think moving on to the second set of what we wanted to discuss was really what role does finance functions play in when business is kind of impacted with these uncertainties. I think the previous panel discussions also finance's role as a business partner or the CFO's role as a business partner or finance having a seat at the table was being discussed. So what strategies have you kind of done in your businesses around building more resilience, becoming better business partners, and kind of helping business tide over these uncertainties? So maybe anybody can start, but maybe Saibal, you want to start?
Yeah, Gaurav, that's the interesting bit of it in inflation. I always believe that diversity propels a lot of opportunities, and especially the CFO's role and the finance's role become extremely critical at this point of time. And this is where, in the interest of time, I'll just take only a couple of examples to demonstrate that. Whenever this kind of, I would not really call it a crisis, but it's definitely a situation that puts a lot of stress into the balance sheet. And that is the time when finance can really wake up the entire organization. And there are two aspects out of the many that we in our organization has done. So just to give you an example, for the last 18 months or so, metal prices, as you know, internationally has been steeply going up continuously, relentlessly, month after month. There was absolutely no check, and it was completely beyond control. Cost prices, input prices, cost prices were completely going through the roof. Margins were depressing. There was huge amount of pricing pressures. Market does not accept passing on the prices and all of that. This is at a point of time when the CFO's organization comes into play in terms of doing a little bit of precision forecasting, tweaking with the strategy. These kind of inflation-oriented situations, which does not last for too long, maybe 12 months, 18 months. The reverse thing has happened. Just to give you some numbers, 12 months back, roughly, the copper prices were to the extent of $8,000 per ton, which in 6 months back or 5 months back, it went up to $9,600 per ton. And within 2 months' time, or rather in 3 months' time, it shot back to $7,700 per ton. How do you manage this kind of a situation? So navigating this kind of a situation in my comprehension, and that's what we have done, one has to take some quick tactical routes in the middle, keeping the long-term objective in mind without displacing that, but some short-term measures and short-term strategy changes and policy changes have to be taken. You cannot really take a very long-term view and a very hard-coded view at this point of time. Procurement was an area where it's basically not only the CFO or the CFO's organization basically drove in having continuous monitoring with the procurement team, how these prices are moving and what kind of strategies have to be taken. And most importantly, it was a tone at the top that this team was empowered to take decisions within the boundaries then and there. This is one part of the example where CFO's organization can drive. The other part of the example is in terms of doing very close monitoring of the forecasts, because the demand planning and the demand sensing becomes very, very important, because the demand really slows down at this point of time, and which has happened, which Amit was also telling that in certain sectors of fast-moving goods, consumer goods, this does happen. So these are some of the ways, and this is the time where the CFO's organization can spring up into action.
Yeah, no, so thanks, Sebal. I think this is extremely important, because if we have to be as finance functions partners to the business, these are the times where you would also have to up our game to make sure that we are coming up with the right ideas to support the business. Amit, coming to you, from a large global organization like P&G, what's the role of the finance function in managing some of these uncertainties? What have you think are the kind of things which have worked well, and any examples where some initiatives didn't really work well?
Yeah, so I guess I'll put this situation in a very different context. Let me answer it in this way. When these kind of situations happen where, and we are going through a unique situation where the FX and the commodity headwinds are both coming at the same point of time. I think post 2007 and 8 during the Iraq wars, when we saw the crude oil fluctuations were, to the highest, I think this is the second time when we are seeing this kind of a situation. Now, what happens is these kind of situations place organization in a very unique spot to, take some long-term and mid-term views with respect to, corrections that they want to do. And what I mean by that is, as a finance organization, and I'm actually wearing the hat of both finance as a business leader, but, from a finance standpoint, traditionally we have been very focused on managing the spend pools or driving efficiencies with respect to, what is the money that's being spent. That's the core behind driving productivity. But I think the larger pie lies in really analyzing the opportunities which are unfolding in this scenario. The trends that are unfolding in the consumer space, in the industry, where you can, encash. To build on this particular point, we have seen that, in the healthcare space, where people have become more aware with respect to taking care of their health, there's a lot of self-medication happening and other things. There had been an opportunity where very low price products can actually be replaced with very premium products, which offer a much better offering to the consumer. And if you change your portfolio in this particular manner with respect to identifying the consumer needs and replacing your low margin portfolio with a more premium portfolio, that changes the game. Because the focus then is not only with respect to managing the cost pool, but you are actually driving the revenue, taking into consideration the consumer trends which are evolving, which is a very different take, versus managing only the cost pool, but, driving the top line and the bottom line, riding on the consumer trends which are evolving during this time. So in my understanding, and I'll restrict this question to what I have seen, across the industry, but I have seen a lot of potential opportunities opening up, even in this inflationary space, and the organizations which are able to relate to those opportunities can really turn the tide around, with respect to the position from where they are to where they can go, rather than only focusing on the spend pool. And by the way, I'm not saying don't focus on the spend pool. It's a golden opportunity to cut the fat. So please do that, but also keep an eye on other opportunities which can give you a big leverage on driving the profitability and shareholder value.
Great point. I think, again, I think historically finance has always been looked at a function which was focused on cost reduction, but you're saying that through the right kind of analytics, through the right kind of insights, you can also focus upon growth and kind of looking at which products, where the profitability is higher, how do you kind of push those products in the market, etc. So great point, thanks. Amrit, coming to you, I think obviously, as you said, the last 5 months have probably been very good, but the 2 years before that were extremely difficult. So what kind of strategies did you employ to kind of keep the organization above water?
I'll say 3 things actually. I think COVID taught us to be agile and embrace the fact that uncertainty is a reality, you know. And as finance professionals, we can get wedded to plans, but you know, plan is only a thematic, it's a directional thing. You will obviously say things will go wrong, things will go awry, things will go in different directions. It is your ability to be agile, be able to kind of navigate the organization and do it as quicker and as faster. So in some sense, the planning cycles from 1 year, 3 year probably shifted to a month, quarter kind of thematics, and you need to be on that. So be agile. Number two, I'll say, I think this reliance on data is, you just can't be agile if you don't have reliance on data. And you know, it's not just financial data, it has to be non-financial data as well. So building those bridges, putting whatever is required to kind of, you know, connect those dots is extremely, extremely important, and we did some of those things. And the third thing I'll say is technology and automation. I mean, you, as a finance organization, they need to keep identifying whatever is a non-value added work that they're doing, just keep replacing, keep automating. And you do this by, obviously, you know, the kind of people that you have within the finance organization, they just can't continue to be traditional finance professionals. They need to understand the power of transformation, technology, data, automation, and all of those needs to kind of come together. So we have been in these journeys, many examples to quote, but I'll just kind of stop here.
Sure. No, I think into the interest of time, but very, very relevant themes, being agile, shorter planning cycles, focusing on data, taking decisions quickly. I think those are all kind of things which, and obviously automation in all possible sense. And I think maybe another theme which probably we can explore is the capabilities of the team, right? How do you really change the mindset of the people from being only controlled oriented to becoming more business partners in that sense? Kapil, coming to you towards the end, from your industry and your organization, what kind of strategies did you employ in the last 6 months or maybe last 2.5 months to kind of help the business tide over these uncertainties?
So see, after the COVID times, last 2 years or last 6 months, there has not been much change in the power sector industry. But one thing is there, as far as the finance team is concerned, the finance head is like a ICC of the business. He is the influencer, he is the communicator, he is the change agent. So
ICC?
Yeah. So basically, since finance is the lifeblood of the business, so you have to keep your working capital or the other things impact. Because in power sector, you are working in a real-time market. You don't know when the opportunity will come, when you have to cash in on that opportunity. So you should be always ready. As Amrit mentioned that you should be agile. So that is something which is very much required. Same thing in the power sector also. But on the second hand, as I earlier mentioned, like pushing up to the cost also doesn't help to a great extent. Like one thing which, there is a saying or an incident, I'll just quote that, which didn't work for finance. A newly recruited person joined and CEO wanted to send the person for a training, which was a very costly training. So CEO told that this is to be. The finance head objected that it's very costly, and if the person leaves, nowadays, like you see, the attrition is very high. So if he leaves, then the amount will go waste. So CEO told, and if he doesn't leave, then what?
Yeah, that is a very interesting anecdote.
Yes.
Which we've heard. Okay, I think in the interest of time, maybe last question or any last thoughts from anybody on any specific innovations which you've done in the last 6 months in your functions to just make it more agile, more future ready, focuses on anything on the people side or the technology side, anything at all which you guys want to probably share with the forum here?
I don't know, it's an innovation. I think there was an important point around, and I also mentioned about the fact that there is a heightened attrition that we are kind of dealing. I think the business that we are into, people is the single most important asset. And this is where I think partnerships with your chief people officer to ensure that the productivity, resignation, cost increase, salary increase, the triangulation, you do that. So as to ensure the best guys you retain, you man them, you get the productivity and throughputs kind of come through. Personally do see that this high environment of attrition might continue for a few months. And I think we'll have to be agile about it and kind of ensure that we take actions to keep our people quite intact.
I think that's extremely important. I'm sure everybody sitting in this room would agree to the challenge of attrition, which all of us has faced in the last 16 to 18 months, I guess. Amit?
Yeah, I would say, one of the things that we identified as an opportunity area where we can contribute as a finance function is driving simplification. and more so in larger organizations. I think over the course of the time, to address multiple requirements of multiple stakeholders, organizations tend to get stuck with respect to processes, systems, and, that's where a lot of the times, not only for finance, but, a lot of other organization, time gets spent behind, really navigating through the complex processes and systems. As a finance, I think one of the key things that we can drive to keep engagement level high within the function, and let's say for the organization also, is to take up the mantle of driving simplification. And when you have to drive that, you cannot drive that from a finance hat. You have to drive that from, really partnering with respect to the functions and the businesses and getting the thought on the table with respect to what's the endpoint that you want to reach. And if you have to draw the map now with respect to reaching that endpoint, how would you like to do that? I think it's a good time, considering that organizations are going through a lot of stress with respect to inflation, profitability challenges. It's a good time to look at the complexity that organization has built over a period of time and reduce that, because that will make finance function more, it will be more rewarding for the people in finance also to add value rather than getting stuck with respect to process.
No, absolutely. I think driving simplification and also the experience which finance provides to your stakeholders, right? Be the customers, vendors, employees, etc. That's extremely important. But yeah, simplification is a very, very important point, and sometimes we don't really overemphasize on that enough. Kapil?
So the changes or what we have done, I had different context earlier, I thought. But while I was listening to the previous session, so Parag Parikh mentioned about ESG. So that is something which immediately came to my mind. That is something now in power sector, mostly it is there, that everyone is moving towards green energy. So you should have something like solar, wind moving away from the conventional. So that is the in thing as far as power sector is concerned in today's world. Because all the P funds or debt funds, they are more interested in investing in ESG norms or green things. So you should reduce the carbon footprint, move from conventional to a greener environmental. That is the change which is happening and continuing to happen in the power sector in the current times.
Thanks, Kapil. Several last words from you.
No, I think all my panelist colleagues have spoken a lot, and there are much more. I don't think I have anything to add. So just to sum it up, I will end it up on a different note completely. With so much of negativity around inflation, battering, environment, competition, this and that, where do CFOs draw inspiration from, and what should CFOs be? And that's what I draw inspiration, and my team draws inspiration. I'll just give a small anecdote. 1983 World Cup, Kapil Dev. All kind of adversities facing, almost like a losing match, converting it, and that is what I think CFOs should be like. Completely taking charge of the situation, whether it is people, whether it's analytics, whether it is analyzing the situation, taking the right strategies, taking the right tactics, just win the match. That's the only thing which matters. And the second example, the second name that draws inspiration from, 1986 World Cup, Maradona. Right amongst all the adversity, the single man went up right from defense to offense and struck the goal. And that has become history today and is being named as the hand of God. I think time has come for CFOs to become the hand of God for the organization.
Thank you so much. I don't think I want to add anything more. Thank you so much, Sebel. Thank you to all the panelists for a very impactful discussion. Thank you.
So, ladies and gentlemen, moving on, I would now like to take this opportunity to invite on the stage a veteran banker who has a successful global MNC career spanning over 3 decades. He has held coveted positions across MNC banks such as Standard Chartered, UBS, and Bank of America, and has an impeccable track record of leading large banks, driving profitable growth, mergers, acquisitions, turnarounds, and the list goes on and on. He has played a key role in transitioning the Centrum Group from a pure play financial advisory business to becoming a diversified financial services group. Ladies and gentlemen, let us hear a big round of applause as we have on the stage Mr. Jaspal Bindra, Executive Chairman, Centrum Group, who is going to come on the stage to present his special address. Let us welcome him with a big round of applause.
Thanks to Financial Express Digital, it is my pleasure to be amongst all of you today. Over the years, I've had the opportunity to interact with and observe several CFOs across MNCs and domestic companies, resident in India and overseas, Indian nationals and foreigners. And my view of CFOs, if I may share, if we go back in time, we had the Munim ji, very respectfully portrayed in many Bollywood films. And their role was pretty simple. It was to record, tabulate, and report performances. If you look at the core role of a financial officer, it remains largely unchanged, even though it's become significantly complex and seriously sophisticated. The CFO of today, as I see it, is one that is an able statesman, one that is a very effective brand ambassador for the company he or she serves, is multidimensional. They are required to be champions in investor relations. They are required to be critical in board management. They are required to be instrumental in technology adoption and expansion. They are very much part of the strategic decision-making. They have expertise in M&A, debt management, tax planning, etc., etc., etc. So clearly, I think I heard one comment from one of the moderators here at the end saying compliance is like a brake. But actually, all control functions are like a brake in the car. Since finance function is probably the most major control function, it is very much like that. Now, I know, it's a negative connotation to be compared to a brake, because not only does the brake restrict speed, it slows one down, it even stops movement, and worst, it is at the end of somebody's foot. Those are not nice ways of thinking about yourself. But if you look at another way, I mean, would any of us speed our car if we didn't have the comfort that there is a brake in the car that works? So I think it's not the horsepower or the several cylinders or the brand name of the car that drives the car. It is the comfort that the brake is working that allows the car to fly. And it's the same thing in companies. I think CFOs are that major control function that give the comfort to a whole variety of stakeholders to be able to fly in the way that the company deserves to. But the perennial question that I thought I will cover today, and we'll try to do this in as short a time as possible because I think we are running way behind the schedule that you were given, is how does one stay a step ahead of the game? Whether you're a CEO or a CFO, it doesn't matter. How do you stay a step ahead of the game? And I think, I just looking through the program of the day, there were several sessions on change. And I think change, as we all know and accept, is a constant. So the first thing is that you have to religiously believe that change is going to happen. In our own lifetimes, we have seen so much change. If it comes to communication, we have moved from, there was no TV when I was born, then fax came, then mobiles came, now internet has come. If I look at science, the kind of development that we've had in science, I mean, you could be innumerable. What could change from here? And the things that come to mind, which I feel, in my judgment, are almost certain to change in the next decade or two, are first, our colleagues will change. Today, our colleagues are all people sitting here, they're humans. Going forward, they will be part human, part robot. Many of our colleagues will be robotic. I think over time, we will all end up in a company. It can be any company. It will be a tech company. Tech company that does manufacturing. It can manufacture steel or cement, or a tech company that does services. It can do financial services or hospitality or consultancy. But it'll be a tech company. We will move away from offline to offline and online. I think we've already seen the start of that. Working from home has happened. We are now able to close big transactions on Zoom. We have all our board meetings on Zoom. When you take food consumption, it is no longer necessary to go to any restaurant. You can even get now food not only from your favorite restaurant in the city, but even from other cities in the country. When it comes to education, we are moving to distance learning at a pretty steady pace. I think over time, many of us will be sitting in this kind of a forum, never having been to college ever. But we'll have we'll have degrees from Harvard and Michigan and MIT and all of those places without having gone there at all. So I think those are the things that will change. There'll be intimidation, disruption, more as a rule than as an exception. I think there will be the black swan events which will come more often. So I think all of these are there. And how does one prepare for these? You basically, given the uncertainty of the pace of these changes, it is impossible to prioritize and also become an expert in any of these future possible changed environment situations. So I think the only secret or trick to getting this right, to being a step ahead, is really to be open. And I know it's a very simple word, but we are so conditioned by our mindsets, by our biases, by what we have grown up seeing, that to learn and relearn is a huge challenge. And I think the ones who can learn and relearn, a critical factor for us to be open to learn and relearn is to be curious. You must have a childlike curiosity to be able to learn and relearn. And to have that childlike curiosity, you must also have a very youthful energy. So it is a summation of all of that. And when you take energy, curiosity, and learning, the common notion that it all builds up to is about being youthful. And we all define youthful by age. Most of us believe that if you are in your late teens to your early 30s, you are youthful. That's the typical definition of youthful. But what's the real definition? Why do we call people in that age group youthful? We call them youthful because you do a lot of your most significant things in life in that period for the first time. You graduate or postgraduate for the first time in that age. You marry and start a family, or at least your first marriage and your family at that age. You vote and start getting counted as a responsible citizen at that age. You drive your first time at that age. You live and earn independently at that age. These are all major parts of your life, your family, your work, your earning power, etc. And that you do for the first time in your life. So really, the question that each one of us has to answer every night before we go to sleep is, when was the last time you did something for the first time? And if that was a long time ago, you are not youthful. It doesn't matter what age you are. And if that was only last week or yesterday or very often, then you are youthful, irrespective of what is your age. The first time you do bungee jumping, I can tell you, you will feel youthful. You could be 60, you will still feel youthful. The first time you choose, or the time you choose to be the first time entrepreneur, I started at 55, you will feel youthful. The first time you appear on TV, you feel youthful. But for Keki, who has to appear every day, it is a pain. So it's all about the first time. And so I think, the first time is more a metaphor. It's really about keeping an open mind, is having the risk-taking ability to get rid of your biases, of your preconditioned mindsets. And if you approach the world with an open mind, I can assure you, you will be a step ahead of the rest and ready for the future. Thank you.
Ladies and gentlemen, I would now like to call on the stage our next speaker, who's going to present a special address on the evolving role of CFOs in the post-COVID-19 world. We are going to take this opportunity to invite on the stage Mr. K.K. Mistry, who is the Vice Chairman and CEO, HDFC. Well, before we have him on the stage and before I give the podium to him, let me tell you that he brings with him over 3 decades of varied work experience in the banking and financial services domain. He's played a critical role in the successful transformation of HDFC into India's leading financial services conglomerate by facilitating the formation of companies including HDFC Bank Limited, HDFC Asset Management Company Limited, HDFC Life Insurance Company Limited, and HDFC Ergo General Insurance Company Limited. I would request everyone to give a thunderous round of applause as we welcome Mr. K.K. Mistry on the stage.
Well, first of all, thank you very much for the introduction. The topic I've been asked to speak on is about CFOs and how CFOs, the evolving role of CFOs, particularly in the post-COVID world. So let me start by saying that it's a great pleasure to be here today, and I would like to thank the Express Group for inviting me to speak at this year's CFO Connect Summit. At the outset, I would like to congratulate all the winners who made it to the Financial Express CFO Power List. I must say that I have a great sense of affinity towards CFOs, having started as one nearly 40 years ago. I think she said 3 decades, it's now 4 decades. The role of a CFO in those days was so much easier than what it is today. There was no real focus in those days on issues like ESG, digitalization, and all the other complicated things that CFOs today need to focus on. Once a CFO, they say, always a CFO. So even today, anything to do with numbers, anything to do with figures continues to excite me. Let me now come to the subject of our talk today, which is on the evolving role of CFOs in a post-COVID world. Understandably, it has been a very challenging period for all of us over the past 2 years, as devastating and unprecedented non-economic forces have in some way reshaped the global economy. World over, CFOs have faced a whole barrage of challenges that they did not see coming, such as the pandemic, the war in Ukraine, the Western sanctions against Russia, volatile markets, new lockdowns in China, continued supply-side disruptions, high oil prices, and the rapid rise in global inflation. On the positive side, in these volatile times, many CFOs have gained rich experience and have become battle-tested. The increasing familiarity with the unexpected and the unknown has made CFOs more accustomed to dealing with new challenges. Successful CFOs have managed to use these volatile times to display their skills in the boardroom. Many CFOs have become more influential as a result of that. In fact, to take a step back, I would say that the last 10 to 15 years have not been an easy period for CFOs. With so many variables to contend with, the responsibilities of CFOs have got extended far beyond the traditional job of a typical CFO. A CFO is today expected to be an advisor, a gatekeeper, a manager, a team leader, and a strategist all at the same time. The age when we could link economic activity with the performance of the corporate sector is really behind us at the moment, at least. The financial crisis of 2008 was the inflection point which threw all the known norms into disarray. The only certainty from the global headwinds is that volatility, black swan events such as COVID-19, and geopolitical risks will keep throwing out newer and newer challenges to CFOs to test their perseverance. COVID-19 proved to be a very testing period for CFOs as they had to adapt to an unprecedented environment. It was an unsettling reality when uncertainty was really the only certainty. The pandemic created disruptions that challenged the skills and ability of corporate professionals on how to address such a crisis. With so many factors to consider, finance specialists prioritized the immediate concerns of the organizations and tried to find ways to tackle the situation. In India, when corporates recognized the gravity of the pandemic, treasury teams suddenly found themselves in a firefighting mode, with the immediate focus on ensuring that there is sufficient availability of liquidity. Cash is king, and protecting the balance sheet were the mantras for almost all the CFOs to survive the storm. The COVID-19 crisis necessitated the shift to a virtual mode or remote operations. CFOs had to rapidly revise all their financial plans for the month, for the quarter, and for the year. The speed at which the crisis was unfolding required CFOs to use new tools, such as scenario-based forecasting, in addition to the traditional levers of management. Whilst in 2020-21, CFOs have had to consider their company's revenue guidance based on pandemic-related issues, this year, the environment has become even more volatile. According to a recent article by Wall Street Journal, CFOs are factoring into their outlook the Russian-Ukraine war, the economic uncertainty, and climate-related issues. As a result, CFOs are widening the range for their revenue forecasts and revisiting spending plans. Past crisis situations and the pandemic have clearly shown that it is important for corporates to control leverage. It is a CFO's responsibility to determine the optimum amount of leverage. It is often said that leverage is a double-edged sword. It magnifies profits during good times, but amplifies losses in bad times. There is a need to manage debt and keep costs under control, irrespective of the business cycle. I would like to lay emphasis on leverage and advise CFOs on a few factors. Firstly, never ever ignore the perils of over-leveraging. When hard times come, there is a risk that your financial structure will quickly deteriorate, and the ability to raise funds will consequently get affected because the rating of the company gets affected. This will leave your organization little or no access to debt markets. I would like to give you 3 examples in recent times. One was 2008-2009. The second was 2013 during the taper tantrum, and then the third was in 2018 after the IL&FS crisis that we had in India. During these periods when financial markets became extremely risk-averse and the cost of funding even for AAA-rated companies rose sharply, let alone the weaker ones who had very little access to funding during that period. Second factor which I would say is do not ignore the early signs of distress. The earlier one recognizes a problem, the easier it is to resolve it. Thirdly, I would say do not ever look for quick fix solutions. Short-term solutions will never help you in the long term. Think long-term and do what is good from a long-term point of view. The one thing which you must always keep in mind is keeping a matched balance sheet. I would like to reiterate that in the financial services sector, profits can be enhanced by taking undue risks, particularly on the ALM front. That, however, creates volatility in earnings. We have therefore, at HDFC at least, avoided ALM mismatches, whether it's on interest rate, whether it's on maturity, or it's on currency. And therefore, because of that, our spreads tend to remain stable. So in any industry, particularly in the financial sector, I would say matching assets and liabilities in terms of interest rates, maturity, and currency are some of the basic challenges that treasury teams face, particularly in these volatile times. There is a need to focus on long-term stability rather than maximizing treasury profits. Hedging strategies in particular should be clearly understood. Several companies over the years, and I can give you so many examples, have burned their fingers having inaccurately believed that they had devised a foolproof way of hedging. What looked risk-free at one point of time in reality turned out to be fraught with risks which were not envisaged. As regards risk management, there are a number of new tools that have gained significance over the past few years. CFOs of companies that have come out well in recent years of volatility must be given a pat on their backs. Risk management has now perhaps become the most important function of a CFO. CFOs have realized that risk identification is an extremely important function. Risk can be both on and off balance sheet. In a nutshell, the risk framework must cut across all functions and across all hierarchies. Risk management is all about preparing for an uncertain future. In the coming period, key considerations for CFOs, amongst others, will be cybersecurity, data protection, and legal compliances. Here I would like to mention that companies need to devise their own reporting mechanism and decipher for themselves what works best for them and their boards. There have been instances where umpteen data-heavy files have been dumped on the board with hundreds of risk categories marked in red, amber, or green. Just flagging of a risk to a board does not solve the issue. The CFO, along with the CEO, has to ensure that risks get the focus and attention of the board and that the board is able to judiciously prioritize these risks. At the same time, CFOs need to be careful that their focus on compliance does not deter them or does not move them away from being a forward-looking strategist. ESG has now become a very important factor that CFOs need to look at. Many CFOs are responsible for designing the mechanism for measuring, reporting, and monitoring the impact of ESG risks, as well as advancing social and diversity initiatives. Many CFOs are now playing a key role in aiding senior management to align ESG with business strategies, which can lead to competitive advantage without being just a compliance compulsion. According to a global survey done by PwC, 59% of CFOs have said that ESG and sustainability will be integral to long-term planning by the end of 2022. A CFO needs to consider two questions. First, is there a trade-off between maximizing shareholder returns and long-term ESG goals? And second is how to ensure that an organization achieves profitable growth and strong returns while also demonstrating that ESG objectives are not compromised. Investors need to feel confident in the accuracy, completeness, and reliability of a bank's ESG reporting or a company's ESG reporting. It is the CFO's responsibility to ask specific questions to those who provide the ESG data within the organization to ensure that the information that is put out in public domain is transparent and reliable. In fact, ESG reporting by companies is now being closely monitored by a variety of stakeholders, including governments, shareholders, regulators, and more so even the customers, even the consumers. Finance departments have a key role to play in ensuring that the sustainability metrics provided to internal and external stakeholders are relevant and accurate and also support the overall execution of the sustainability strategy. While communicating with investors, CFOs should assist the investor relations teams to clearly address the company's ESG goals and develop concrete and measurable targets such as reducing carbon emissions and increasing employee diversity within a specified timeline. A transparent ESG strategy will signal to the investors that the company has taken steps to mitigate downside risks while potentially unlocking new opportunities. I would like to compliment SEBI in this regard for coming out with the Business Responsibility and Sustainability Report. We've been preparing this report now for the last nearly 3 years, and we find that it is extremely rich in quantitative terms. It is important that the CFO goes through this report in detail and asks for clarification if there is any doubt any doubt or gives a sign-off before it is published. Technology is the other big issue that I would think CFOs need to look at. COVID-19 accelerated several organizations' digital transformation initiatives. According to a survey by McKinsey, COVID ushered in rapid technology adoption that normally would have taken place over a period of 3 to 4 years. We at HDFC adopted digital transformation very quickly, and even today, after everything has opened up, almost 92% of the business we do comes through digital channels. Similar digital transformation has been taking place across many organizations, and CFOs are leveraging new technologies, automate and streamline financial reporting. I personally believe that CFOs should be mindful of costs, and according to a global survey, at least 30% of the typical IT budget is wasted by companies in their journey towards digital transformation. As the gatekeeper of most of the data needed for strategic planning, CFOs need to carefully evaluate the costs and benefits of digital investments. Another issue which has become very important in recent times is cybersecurity. How we tackle cybersecurity is still at an evolutionary stage. It is said that the new war of the 21st century is most likely to be related to cybercrime. Non-financial responsibilities such as those related to technology are putting many CFOs on alert. Surveys have shown that a majority of CFOs have admitted that their companies do not have the capability that they believe is necessary to be competitive in this age of digitization. Also, many CFOs feel that their companies are not well prepared to be competitive on their cybersecurity capability. In conclusion, let me say that we are witnessing strong economic revival. I truly, honestly believe this. We see this in our business. I talk to so many friends in industry, and all of them are extremely bullish, extremely confident of what's happening here. It shows revival and significant amount of stability in India. CFOs and senior management will need to conduct an honest review of their systems and processes that have centered around the organization through difficult times. CFOs will need to learn from this experience and emerge stronger so that they are better prepared for the next crisis. Unprecedented challenges should not deter CFOs from their long-term standing principles. For instance, shareholder value should never be seen in terms of an organization's ability to generate short-term profits, but should be judged in terms of its ability to manage all the factors which have a bearing on its long-term viability and strength. A CFO needs to ensure strong financial health in the long term, which is essential for future growth. Often, short-term sacrifices need to be made in the interest of long-term stability. The task ahead for CFOs is challenging and exciting, given that the role of a CFO in an organization is gaining much more prominence today than what it had 30, 40 years ago. Today, a CFO is a conscience keeper of the organization, and besides assisting in fulfilling the CEO's vision, he has to comply with the board's directions and, above all, be a strategic decision maker. As is aptly said, a CFO is skeptical in the face of exuberance, encouraging in the face of pessimism, cool in the heat of battle. His job is to know the real story, and it is also his job to tell it right. I wish all the CFOs present today all the very best for these interesting times and the promising task ahead. And once again, my heartiest congratulations to all the winners. Thank you very much.
Ladies and gentlemen, with this, we head to the moment we all have been waiting for, our FE Power List Recognition Ceremony. Today, we have gathered here to honor the exemplary work done by our colleague CFOs in various industries. Just to take you back, this recognition that you will witness here is the result of rigorous work done by financialexpress.com team for about 2 whole months. The team started with 500 names from the industry, and after an extensive perceptual survey, they zeroed in on some names worthy of this coveted recognition. This felicitation is being conferred to the Chief Financial Officers for their exemplary contribution to the industry and to their respective organization. Work that has inspired many and helped ensure resilience, innovation across the industry. We will now be announcing the names in an alphabetical order, and just a small request to all of you, to all the recipients of this recognition, we request you to come to the stage from the left and exit the stage from your right. To do the honors, I would once again like to invite on the stage Mr. K.K. Mistry, the Vice Chairman and CEO, HDFC. Once again, let's welcome him with a big, big round of applause. Thank you so much. And now, can we have the AV, please? The FE Power List. Firstly, let's have on the stage Mr. Akarshan Mukim, the CFO of Macmillan Education India Private Limited. Let us welcome him with a big, big round of applause. once again request all our leaders to please enter from the left and exit from the right. Moving on to our next leader, I'm going to invite on the stage Mr. Abhinav Jain Ranka, CFO and Finance Lead from Easy. Let's welcome him with a big, big round of applause. Continuing the names of the power list, our next recipient is Mr. Ajay Seth, CFO, Maruti Suzuki. Let us give it up for him. The applause should not stop. Congratulations once again. Let's move on to the next name of the list. And the next name is Mr. Akshay Sarma, CFO from Axio. Let's give it up for Mr. Akshay, ladies and gentlemen. And the applause should not stop as we move on towards the next recipient of the FE Power List. And our next leader is, let's give it up for Mr. Amit Agarwal, Group CFO, Raymond Limited. Moving on to our next leader in the FE Power List, and the next leader is Mr. Amit Gupta, CFO and CLCH India Exports from PNG Health Limited. एक बार जोरदार तालियों के साथ let us welcome him on the stage. Congratulations once again. Moving on to our next name in the FE Power List, and the next name is Mr. Amit Prabhu, CFO and Executive Director, Puma India. Let's give it up, everyone. I think Mr. Amit is not present here with us. Moving on to the next name in the FE Power List, which is Mr. Amrit Singh, CFO, Max Life Insurance Company Limited. Congratulations. Audience towards my left, एक बार जोरदार तालियां हो जाएं. Let's give it up as we congratulate all these leaders, the recipients. Moving on to our next name, and ladies and gentlemen, our next leader who we are going to recognize today is Mr. Anuj Tiwari, VP Finance from Yulu. Let's give it up for him as we invite him on the stage. Congratulations, Mr. Anuj Tiwari. Now, without further ado, let's move on towards our next recipient, जो है Mr. Ashish Shrimal, CFO from Sterling Accuracy Wellness. Let's give it up, everyone, for Mr. Ashish Shrimal. Ladies and gentlemen, let's give a big, big round of applause to all the leaders of the FE Power List. Moving on towards our next name, and the next name is Mr. Arvind Talan, CFO Jet Freight Logistics Limited. Let's give it up एक बार जोरदार तालियों के साथ. Congratulations to Mr. Arvind Talan. Moving on to our next name, and let's continue giving a big round of applause as we have on the stage Mr. Chirag Mawani, CFO from the Soul Store. Let's give it up, everyone, for Mr. Chirag on the stage. I can't hear any round of applauses, so please एक बार जोरदार तालियों के साथ let's welcome him. Continuing the list of leaders, next we have on the stage Mr. Gopal Balachandran, CFO and CRO, ICICI Lombard GIC Limited. Congratulations, and let's give it up loudly for Mr. Gopal Balachandran. Congratulations once again. moving on towards our next name, our next recipient is Mr. Rishikesh S. Redich, CFO from Hansa Security. Let's give it up, everyone, for Mr. Rishikesh. And now let's move on to calling on the stage our next leader, who is Mr. Kaliswaran Arunachalam, Group CFO and Head of Strategy, Crompton Greaves Consumer Electricals Limited. Let's give it up for Mr. Kaliswaran on the stage. I think he is not present here with us. Let's move on to calling the name of our next leader. And ladies and gentlemen, our next leader is Mr. Kanan Sugantaraman, CFO from Omega Healthcare Management Services. Let's give it up, everyone, for Mr. Kanan on the stage. Audience, show some energy, show some enthusiasm as we call on the stage our next leader, जो है Mr. Kapil Singla, CFO from SR Power Business Group. Let's give it up once again for Mr. Kapil on the stage. The next recipient of this recognition, we have Mr. Madan Mohan, CFO, JS Autocast Foundry India Private Limited. Let's give it up once again for Mr. Madan Mohan on the stage. Continuing the FE Power List, our next recipient is Mr. Mayank Gupta, Group CFO, Car Dekho Group. Let's give it up loudly as we have on the stage Mr. Mayank Gupta. Congratulations, Mr. Gupta, on receiving this recognition. Moving on, our next leader who's going to join us on the stage is Mr. NVV Chalapati Rao, CFO from B5 Plus Group. Let's give it up louder as we have on the stage Mr. Rao. I'm going to call our next leader from the FE Power List on the stage, who is Mr. Narayan Saraf, the Senior Director Finance CFO from Thermo Fisher Scientific India. Let's give it up, everyone, for Mr. Narayan Saraf on the stage. Thank you so much once again for joining us here today. And our next leader, ladies and gentlemen, is Mr. Nilesh Kambli, CFO, Star Health and Allied Insurance Company Limited. Let's give it up once again for Mr. Nilesh Kambli. Congratulations once again. Our next leader of the FE Power List, ladies and gentlemen, is Mr. Nitin D. Parekh, CFO, Zydus Life Sciences Limited. Let's give it up as we have on the stage Mr. Nitin D. Parekh. Congratulations, sir, once again. Now moving on to our next leader, I am going to take this opportunity to invite Mr. Parag Parekh, CFO, Adani Total Gas Limited. I'm going to take this opportunity to now invite the next recipient of this recognition, जो है Mr. Pavan Agarwal, CFO, Marico Limited. Let's give it up louder as we have on the stage Mr. Pavan Agarwal. And now moving on to our next leader. In the FE Power List, we are now going to invite on the stage Mr. Prakash Chandra Bisht, CFO and President, Jubilant Ingravia Limited. Let's give it up loudly as we have on the stage Mr. Prakash Chandra Bisht. And for their hard work, our next leader who we are going to invite on the stage is Mr. Pramod Nair, CFO, Everest Industries Limited. I think he's not present here with us, so we have Nimisha who has come to receive this award on Mr. Pramod's behalf. Moving on, let's have the next name of the FE Power List, our next recipient, who is Mr. Prashant P. Thakkar, CFO and Executive Director, Suvidha Infoserve Limited. Congratulations, and let's give it up louder as we have on the stage Mr. Prashant P. Thakkar. Continuing this list, I'm going to call on the stage our next leader, who is Mr. Pratik Chandra, CFO, India Mart Intermesh. Let's give it up, everyone, as we have on the stage Mr. Pratik Chandra. Let's cheer it up loudly as we have him on the stage. Moving on to our next leader, I'm going to now invite on the stage Ms. Priyanka Chaudhary, CFO and COO, RIL Media Business, Geo Studios. Let's give it up loudly as we have Ms. Priyanka Chaudhary on the stage. Let us now move on towards our next name. From the FE Power List, we have Mr. Rahul Jain, President and CFO, SRF Limited. Let's give a thunderous round of applause as we have Mr. Rahul Jain on the stage. Moving ahead, I would now like to invite on the stage Mr. Rahul Kedia, Head of Finance and Operation, Company Secretary from Roche Diabetes Care India Private Limited. Congratulations, Mr. Rahul, and let us give a big round of applause for him. Our next power leader, ladies and gentlemen, is Mr. Rakesh Agarwal, CFO, Metropolis Healthcare Limited. Let's give it up loudly as we have on the stage Mr. Rakesh Agarwal. Continuing this journey, and I would now like to invite on the stage Mr. Ritesh Bansali, CFO, Yokohama India Private Limited. Congratulations, sir. And let us welcome Mr. Ritesh Bansali on the stage with a big round of applause. And let us now invite our next leader, who is Mr. Ritesh Tiwari, Executive Director, Finance and IT and Chief Financial Officer, Hindustan Unilever Limited. He's not present here with us. So we have Mr. Prashant who's come to collect this award on his behalf. Congratulations to Mr. Ritesh Tiwari. Continuing the list, we have our next leader, who is Mr. Sachin, CFO and Director Resources from Praj Industries Limited. Let us give a big round of applause as we invite on the stage Mr. Sachin. I think he's not present here with us. So I would continue this journey and call on the stage our next leader, who is Mr. Saibal Sen Gupta, CFO, Orient Electric Limited. Let's give it up loudly as we have on the stage Mr. Saibal Sen Gupta. And now let's have on the stage our next leader from this power list, who is Mr. Sandeep Bardia, CFO, Cloud9 Group of Hospitals. Let us give a big round of applause as we invite Mr. Sandeep on the stage. Now moving on, I would would take this opportunity and invite on the stage our next leader of this list, who is Ms. Shefali Sevani, CFO, Lloyds, India. Let's give it up as we invite Ms. Shefali on the stage. Congratulations. And now, continuing the journey, I would now like to call the achiever whose name I called in before. I would now like to invite Ms. Sandhya Sriram, Group CFO, Narayana Health. Congratulations once again, and let's hear a thunderous round of applause for Ms. Sandhya. Power list, we have the next 6 to 7 names remaining. So I would quickly move on to our next leader, who is Mr. Saurabh Jalan, CFO and Director of Operations for India Business, Accenture. Let's give it up as we have on the stage Mr. Saurabh. Moving on to our next leader, I would like to invite on the stage Mr. Srinivasa Raghavan, CFO, Healthcare Global Enterprises Limited. Let's give it up as we have on the stage Mr. Srinivasa Raghavan. Continuing the list, I would now like to invite Mr. Sumit Chaudhary, CFO of RappiPay Fintech Private Limited. Let's give it up loudly as we invite Mr. Sumit Chaudhary on the stage. Next, I would like to invite on the stage our next leader in this list, who is Mr. Surjit Chakrabarti, CFO from Medgenome Labs Limited. Let's give it up as we invite Mr. Surjit on the stage. Followed by this, I would now like to invite on the stage our moderator who gave us a very insightful session. We would like to invite Mr. Sushant Pai, the CFO, Matrimony.com Limited. Let's give it up, everyone, as we invite Mr. Sushant Pai on the stage. Continuing this list, our next recipient for this recognition is Mr. Tarun Soni, CFO, Bizongo. Can we invite Mr. Tarun Soni on the stage with a big round of applause? Congratulations, Mr. Tarun, once again. Our next leader of the FE Power List is Ms. Upma Goel, CFO, Piramal Enterprise Limited. Let's give it up as we invite on the stage Ms. Upma Goel. Moving on, our next leader who we would like to invite on the stage is Mr. Vikas Jain, CFO, TBO.com. Let's give it up as we invite Mr. Vikas Jain on the stage. And now, after Vikas Jain, I would take this opportunity to invite Mr. Vikas Sarda, CFO, Unitas Capital, Unitas Ventures on the stage. Let's give it up as we invite Mr. Vikas Sarda on the stage. Let us hear a big round of applause. Ladies and gentlemen, आगे बढ़ते towards our next leader. We are going to invite on the stage Mr. Vivek Bansal, Executive Director and Group CFO in CRED. Let's give it up as we invite Mr. Vivek Bansal on the stage. I think he's not present here with us, so I would continue this list and invite on the stage Mr. Yogesh Patel, CFO, Mahindra Logistics Limited. Let's give a big round of applause as we invite Mr. Yogesh Patel on the stage. Our next recipient in this list is Ms. Neetu Kashiramka, CFO, VIP Industries Limited. Let's give it up as we invite on the stage Ms. Neetu Kashiramka. And now, last but not the least, I would once again request Mr. Kaliswaran Arunachalam, Group CFO and Head of Strategy, Crompton Greaves Consumer Electricals Limited, to kindly join us on the stage. Let us welcome him with a big round of applause. Mr. Mistry, this brings us to the end of the CFO Connect Conclave 2022. I think this day deserves a big, big round of applause. Thank you so much, everyone, once again, for taking out your valuable time and joining us here today and making this first edition a big, big success. I think we deserve 3 cheers for this day. So let's give it up. Hip, hip. Louder. Hip, hip. Hip, hip. Thank you so much once again. And before we conclude the day, I would request all our leaders to please come on the stage for a group photograph. I would request all our leaders, all the recipients of the FE Power List to please join us for a group photograph.